Are we Gucci? I can't tell. I forgot the whole flow. Cannot tell. Are we Gucci? I can't tell. It sounds Gucci. It does sound Gucci. I'm a little late. I have to go get groceries, go do the whole shebang. Cover my driveway. It's the middle of a snowstorm. God damn. I need to open the chat. I need to open the chat. It's been so long, and I'm exhausted. I don't know what's going on right now. I think we should be Gucci. Where is the Discord? Too fucking easy about that. Oh man. Oh man. Got a lot to do here. Boom, 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 boom. I've listened to this in so long, goddamn. And I'm starting to get sick. Oh damn, I didn't get any water to grab that. Where do we get up though? Before Christmas, right? Yeah, I was during this whole consolidation. Whatever, for anyone that's been following along in the Discord, you already know what's going on, right? Nothing to catch up on. It's in terms of the Bitcoins. Cause I've been trading some other stuff. Some traditional market stuff. Also, shout out to our Colgate, right? Shout out to the Colgate. Who remembers when we got into this thingity thing? This thing just ran off. Goddamn. We gotta fix some of these because my charts are way different now. But I haven't updated them on this computer. But first and foremost, update our levels. First and foremost, NASCAR, although Tay Marcos market has gone weird lately. Well, it depends on your definition of weird. Lower this a bit. You know, I've seen a lot of people that trade low caps crying on Twitter. Kind of like a bunch of bitches. Actually, I should do this on my laptop. Historically, a 7 to 10 a.m. time frame has been the sweet spot for trading small caps. That has not worked the past couple of weeks. I mean, I don't know enough to know. I don't dabble in small caps to know if there's any rhyme or reason to why that's happening, but like ultimately, markets change, right? That's why people's like edge erodes, etc., etc. To kind of just like assume that's something that worked in the past will continue to work indefinitely. And 472. I don't know, from what I'm seeing from those groups of traders that dabble in that world, like they're all complaining that like algorithms are just wrecking them. Also, speaking of algorithms, I don't know if you guys have been playing with this Claude Opus. Goddamn. God fucking damn. That shit is crazy. Like literally crazy. Now, I made a pipeline, so I literally give it a textbook on algorithmic trading. It reads the book, extracts all the algorithms in it, codes them, and then tests them all, and then provides me like a report on the effectiveness of them across different time frames and assets. I fucking just code. I coded that via prompting. I didn't like actually code it. Like, sure, I could have coded it by hand if I wanted to, but the fact that I can do all of that just by prompting is fucking insane. I've been coding so much stuff with that. Do we do everything? 16. So something's wrong with TradingView. Like I don't. It's my first time on this computer in literally months, but something is not like lagging or something. Why is this happening? Yeah, Claude Opus, no joke, no joke. The crazy thing is the credits though. Like I have like the maximum plan, like $200 a month or whatever it is, and I'm still running out of credits. Like I changed it. Now they have like this mode called Opus Plan, where like the newest model will like plan everything and then like delegate the tasks to like less efficient model, like more I guess like token efficient models. Every day between the past 2 weeks I guess we had Asian runner spike midday. TCGL. I think I've seen that one because then a bunch of people get wrecked, but like a bunch of traders like on the. I'm pretty sure I saw that one on Twitter because it didn't it like halt, and then when it resumed, it like had like Giga gapped up. I saw like a bunch of people that like literally blew their account on that. I was laughing at them. Getting my lulls in. Everything I end up doing. Also, our Pepsi thing, right? Our Pepsi thing has been sending too. Well, all these things are like the Colgate, Pepsi, and I got like some Kraft Heinz the other day. This thing has broke up some like massive like year-long downtrend. Thing was just going down, 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 and down. But it was a halt fest. The reason why I would never ever short small caps low liquidity. Yeah, I mean that's the risk of that stuff. Thing is, I don't feel bad. I honestly, if anything, I'll laugh at those people. Like one guy was on there talking about how he like blew his life, so his account got blown, lost his life savings, blah blah blah. I'm like, what do you fucking expect? It's just such an unnecessary amount of risk to be taking. As usual, everybody wants to get rich quick, don't want to put in the work. Can't say I feel bad. How do I close this? Bum, 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 bum. After these Asian stocks, another trend started up with Class A, Class B tickers. B. What is wrong with my trading view? Is it the mouse? Where's the other mouse? Oh, it is the mouse. Is it? We'll have to investigate this. Like my screen's like flickering and whatnot. I don't know what the hell's going on. Kelly B. Kelly B. What is this? Oh my gosh. Interesting. It's funny because what these people are saying is exactly what I was talking to somebody about like a few months ago in Toronto. Like taking advantage of all these fucking short sellers that trade like only low caps and only short it. Because if you have enough money to constantly bid this up as they're shorting it, you're just gonna fucking wreck them all. Yeah, well, I need to set up this off my computer. Where's my BS code? So I've been doing everything on my laptop, so I haven't been on this PC since I left here. So none of this, like, none of the like AI stuff, or like coding is like set up. We gotta do that tonight, hopefully. Yeah, I coded so much stuff. I have like a Darkpool data analyzer now. I can just download the Darkpool data from like the FINRA like API and do like some pretty interesting analysis on the Darkpool data. So much stuff. I can't even think of how much stuff I've been making with this because it's so fast. Higher day, Kelly B closed 1081, 4M spike to 70, 300 shares. Where have I been at? I just went home. So home for Christmas. Been hanging out there ever since. Now we're back here because I have an appointment to get an ultrasound for my shoulder. When is it? Thursday? We're gonna be here streaming for a bit. I have to leave next week though. I have to be back in Toronto to see my orthodontist on the next Thursday. Not this coming Thursday, but Thursday after. Probably only like a week and a half of streams or so. And then I'm gonna be there for like another week-ish, maybe 2 weeks, and then we'll be back here for like a while. But we'll see. That might be changing. Because I'm looking into moving. I want to move back to Toronto. Ottawa's not, like where I am now is not, hasn't been doing it for me lately. The only good thing about being here is like how productive it is. Because there it's like distracting. It's like I'm seeing family, I'm seeing friends, I'm like going on dates, blah blah blah. And it cost me. It actually cost me. I was thinking about it in hindsight. This 3 drives, and you know the crazy thing about this fucking thing is that I even post about this in the Discord. This fucking thing printing up here. Now, what did I write? This would have been when? October. Because this happened while I was in Toronto. And I don't know what I was doing that night. I'm pretty sure I went on a date or something, or like that like day or so. And I wasn't paying attention to like the charts. And I didn't sell spot here when I should have. And I ended up having to sell it on the bounce afterwards, back up to like this bounce back up to 116. Whatever it was a here, I think. So instead of like getting out of my spot bags like here and here, it was like here and like the 98 one, right? And all because I just wasn't paying attention. Was not dialed in. Yeah, like October 8th. I haven't taken any trade since, as I wasn't around actively trading. So fucking stupid. Anyways, doesn't matter. Don't put crying over spilt milk. We have a whole career of trades ahead of us. I'm not gonna see her crying over not pixel perfect juicing my spot bags. Or I see BTC by end of the year. We're pretty bearish, 32K target by the end of 2026, maybe around November. I don't know. Can't predict the future. I don't know. Definitely possible though. I've been giving that some thought, right? But coming down here would be like the post ETF nuke, right? This is when the ETF came out. So if we did retrace down to this, now anyone that bought from the ETF launch onwards would be underwater, right? So it'd be quite the shakeout. It's definitely possible. Plus, a lot of people have been looking at this like head and shoulders kind of thing. I don't know if it's like a correct, like a technical head and shoulders, but let's just run with it for the lulz. It is like around there, isn't it? We're pretty close. And plus, if we lose this node, that is like the next spot, right? Something around there. Maybe we fill in this area and it goes. Hard to say though, hard to say. Because anything can happen. Like a lot of this stuff is like people are basing on like the 4-year cycle, and same with the timing. Like November, October-ish, they're expecting the bear market lows. I'm always a little paranoid of that stuff, right? Like, is it ever that easy? I'm not sure. Definitely the cards though, we'll say that. Especially because like this is all happening as like this stuff is up here, right? Like imagine this does actually correct back to like this level. You think Bitcoin's not going down with this shit? I'd be highly suspicious of that. Like you'd have to see like a massive breaking of correlation, like the first time ever, basically. I'm with you there. It almost seems too easy to follow the previous trends. Hard to say, right? At the end of the day, a lot of people didn't sell at the highs either, right? Like if we were to be all following along with the 4-year plan, like this was the window for the top to be in. Most people didn't like get out anything. They're just like still sitting in their positions. It's like, yeah, everyone's aware of like the 4-year cycle, but how many people are actually acting on that? I don't know. Based on the sentiment I'm seeing online and whatnot, I'm pretty sure very little few people sold up here because everyone's fucking just sitting here baby raging. Oh, like the cycle's manipulated, blah blah blah. Like Binance this, paper, Bitcoin that. Sounds to me like you're fucking coping because you're holding the bag. Massive copium. We'll see. We'll kind of see, right? Just go along with the data, take our trades as they come. Because anything's possible, right? The midterms coming up, maybe they want to kind of give some life back into the crypto markets. Who knows what Trump will do? Behind the scenes, like there's what's it called? Like a lot of what you would believe to be like bullish news in regards to like Bitcoin and whatnot, right? Which no one cares. No one cares because the price is down. Where is this tab? Bum, 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 bum. Plus, like, I mean, how do we say this? Like, did they change the PDT rules in the US already? Because I imagine a lot of people that are actively trading are just kind of getting bored, right? The people that are like trend followers, looking for like high volatility. There's so many things in the regular market that are going crazy. Like, do you really care to sit here trading like alts when you can trade some of this stuff? I don't know. Kind of just time-based capitulation, just boring everyone to death, breaking their will slowly. Slowly but surely grinding down their will to play the game. And once they all give up, yeet, yeet, later. They haven't changed day trading rule yet. That have a huge impact on volatility when it gets approved. Yeah, I can imagine. I'm curious to see what's gonna happen when the Nasdaq starts trading 24/7. It's like in June, isn't it? Second half of 2026, no actual date yet. It'll be interesting to see how much volume it gets. What are we missing here? Oh. What's the math? Shout out to the fucking math, right? God damn. The price has just been pixel fucking this stuff lately. Yeah, I also made a bunch of trading view indicators. That's the other thing I was doing. I made a bunch of trading view indicators. I have a huge to-do list though. There's so much more I want to do. Yeah. Let's log into this thing. I have an alarm down here, by the way. Been working out a lot more this year, getting my mind off the charts. Yeah, I mean, it's good. It's good. It's a good thing to do. I'm doing the same. And I've been doing that. It's like the whole time I've been streaming, but I'm now like hitting PRs for the first time since surgery. I almost have a 5-plate deadlift now. God damn. I've been doing. I wasn't doing any like ab specific workout before. For the past, since I left here, basically, I've been doing abs every day, every single day. My deadlift has fucking skyrocketed. I don't know why I wasn't doing that sooner. But it's good. It's important, right? Important to be like what's the point of making a bunch of money if you're just like in shit health both to die? Kind of pointless. Plus, like the other thing is like if you're just kind of sitting here looking at this chart on like the fucking 15-second, it's like mindlessly like trying to trade and whatnot. It's kind of wasting your time, right? Not gonna get a whole lot of value out of that. True. 205 started the year, but down to 185. Yeah, that is super aggressive. That's super aggressive. Like, I guess it depends though. Like, like if you were 205 of like lean muscle and you did that, that's like hyper aggressive. Like, you should not be doing that. But like if you were just like a high BMI, lost a bunch of weight relatively quick, probably not the worst thing. because like you will have like a newbie gains, but ideally, yeah, like most people say like 0.5 to 1 pound per week, like maybe 2 pounds per week weight difference. You're being like super aggressive of whether you're gaining or losing weight. Because I've done that before. I've done the same thing. I've done the same thing. Well, I was like overweight, and then like I tried to cut like super aggressively, and this was like when I was already working out. So I was like overweight with muscle. And I ended up just like losing a bunch of my gains. So I was like dieting like too aggressively and just like lost a bunch of muscle. And then like same thing with gaining weight. If you're trying to like put on muscle, you end up just becoming fat. Also, I don't know. I'm like a big advocate for that stuff. Like, maybe just me, but I find that, how do I say this? But the more things you do in life that require you to be disciplined, like the more disciplined that you will become. And like, if you're very disciplined in the gym, it'll like carry over to other aspects of your life. Like it'll like assist you in your trading, etc. Like if you're disciplined with your like work ethic at your job, you'll be like disciplined with your gym routine. You'll be disciplined with your diet. You'll be disciplined with like your trading. Kind of work synergistically in some regard. Can I ask you how much protein you have each day? I seem to never hit my target protein intake. Too many carbs and fats, I guess. Depends on the day. Usually like 170 to 200 grams of protein. Something in that window. Then I have like 50 to 70 grams of healthy fats, and then the rest of like my diet I fill in with carbs. Because like, you need fats, right? You can't just like not have any kind of fats. Like they're pretty important for like like it's like a delivery mechanism for nutrients and whatnot in your body, like your hormones. It's like not good to have like a zero fat diet. Yeah, I'll like I always start with like I don't know. I always tell people, okay, if you go to the gym and you go see some like jacked fucking guy who's in shape, like jacked and lean, and you go ask them how much like what they eat, they're always gonna know, right? You never just see some random big ass dude who doesn't know anything about what they're eating when they're like big and lean. Because it's super important, super important. But for a while I was working out and I was eating like 100 grams of protein a day. I wasn't really getting anywhere. Like I was already like an intermediate lifter at that point, but I started slacking on my diet in the sense of like monitoring my protein. And as soon as I started eating 200 protein or like 200, 180 grams again, it's so noticeable, so noticeable. Like your muscles feel denser, you can like your recovery feels better. The nutrition is super important. I want to meet the Jack guy who eats Taco Bell. I mean, there are people that like eat that stuff, but you can't like overdo it. You can't overdo it. Like you can't outwork a bad diet. Because if you go to the gym and you're not doing like cardio, like you just go there and you're like doing like a bodybuilding, whatever, power building program, whatever kind of program you want with zero cardio, you don't burn that many calories. People think that like just going to the gym lifting weights burns calories. It really does not. Like 100, 200 maybe. Like I saw some video of some guy that did the math on this. I think it was like he deadlifted 800 pounds like 10 times. Like I think like deadlifting 800 pounds was like 3 calories worth of like energy expenditure for like the weight. Something along with whatever, extremely low. I don't remember the exact numbers. I watched it a really long time ago. Like you get the gist. I need water. My throat is so dry. I'm getting sick. Let me get some water to sip on. Yeah, okay, let's just list some of the things that we made. I made a new automated trading journal. I made like the algorithmic trading textbook analysis tool. I made a screener. I made a new sentiment analyzer. I made an analyzer for the cumulative traders reports. I made a Gex interpreter for like the gamma. Well, it's not just Gex. It's like all the like the Greeks. It's like it does these like very interesting visualizations for all of them. I mean, it's like a machine learning. What would you call this? Not really a program. Like essentially, I feed it like a chart data with data for indicators attached, and it does like analysis on like how correlated the indicators are, like if it's worthwhile to use them together or not. But it does like a bunch of like covariance matrices, and if it's like a very high covariance scores, it's like you shouldn't be probably not doing that, at least on the same asset. Yeah, a lot of shit. Okay, where's the water? Plus, the other thing was like those videos that we were watching before like I stopped streaming, like all the interviews and whatnot, where we'd be like taking notes and someone would mention interesting stuff. Like I coded all that stuff. I coded all of it. Boom. And same with like the guy, like the one dude who was doing like the 3-hour video of him scalping with the bubbles, like Fabio. Like he was talking about some like some interesting algorithmic applications he was doing on the side, and like did a deep nerd out on that stuff as well. Automating loggers sound interesting to me. We try to do stuff, but it's very bare bones. Some sort of on Excel. Yeah, I used to do that as well. But the problem with like Excel and whatnot is that when I wanted to put screenshots, it was always like a pain in the ass. Because normally what I would do is I would like go on TradingView, where's this thing? And like do this thing, like get the link and then put it in the spreadsheet. But then I always worried. I was like how long is this link valid for? Is this gonna like exist forever? I don't know. Yeah, but now like with this thing, it like logs automatically, and then I can like just save all the screenshots on like a local database. I'm trying to do more. I tried making what was it? Where's this thing? What did I call it? Like my own version of TradingView. Like literally my own version of TradingView. But there's a lot to do for that. That's like a pretty big undertaking. Like right now, it can like load the charts and whatnot. But it's like very bare bones as of now. Yeah, like that's all it can do. But it's like the reason I wanted to make it that way is because it's like a lot faster. Like I don't know if you guys have been playing with like for the people that trade crypto specifically, like the Monkey Market terminal. I was playing with that over the break. It's pretty fun to use, right? Like how fast it works. I'm able to track all my spread screenshots in Excel. Yeah, like you can put screenshots in there, but just like I don't know, I still don't like it. When you have when you have multiple screenshots for like one trade. But sometimes I do want to just see the picture right away. Wait, how did Hood do? How did Robinhood do? Because I bought some of that Bitcoin was nuking too, but their earnings was today. Whoops. Damn. 78. Damn. This thing was mathing too though. Bing bing. Might get Septo break even on this. We'll see how tomorrow goes. Bum, bum, bum. The other thing I want to do that's on my to-do list is like a bot to trade on Poly Market. Thing is, I haven't played a Poly Market enough to like have a feel for how it really works. Like I see a bunch of people like posting like threads on X about like the bots they set up, but like obviously if they're posting about it, I don't know the efficacy of them once everyone does the same thing. So I have to like come up like I haven't used it enough to come up with my own ideas of what I want to do myself. We do have to do a bit of reading for that. Why isn't this working? How about them gold and silver moves though, right? God damn, god damn. QNCX was an all-day runner today. Over 600 at one point. And what is wrong with this thing? What chart? Harris Kamal. Hi Marcos, welcome back. Hello, hello Harris. How were the exams and whatnot? The holidays? PR was that they're looking into strategic alternatives. I thought I was wondering, like I'm guessing like they like something came out, like they like failed, they're like or like no statistical merit to the drug that they were doing, I guess. You know, like now they're looking at something else, I suppose. I don't know. Yeah, it did work. What the hell? Okay. I don't know. Seems to me like people that are trading these things are getting wrecked. Hard to say though. Like X is like very. What's like the phrase? Like a vocal minority. I'm sure there are like plenty of people that do exactly what I do. They just read it and don't care to say shit. Actually, like I can guarantee that's the case, right? Because when you ever see any like whale tweeting on there, it's like extremely rare. What was that one chart you mentioned? Where is that then? TCGL. Wait, is this another one? Oh. Did they remove it? What happened to this chart? Plus, the other thing about this stuff was like, I swear, haven't you mentioned before how like, isn't it like a known thing? 'Cause I'm pretty sure you mentioned this, that these like low cap Chinese companies are like hella suspicious. Like I know for sure you've mentioned it before. So I've seen people mentioning it on Twitter too. So like, how is it that everyone knows that this is the case, yet they still dabble in this? Bit odd. Little strange. We gotta be mindful of this thing. The other thing is, I haven't even used like CloudBot yet. Whatever it's called now, OpenClaw. And I've been using Opus, but like not via that thing. So we should set that up and play with it at some point. Whoops. Whoops. Left some messages unread here. God, I'm hungry. I'm getting hungry. Oh yeah, whoops. Well, so I'm kind of salty. You can't no, I don't know if anyone has been trolling, right? The Canton network. Quite the interesting asset we have here. But it's not on like any of the sites I use to like leverage trade. I was able to buy some spot though pretty early actually. Not really enough. They have it on like the regulated exchanges in Canada for spot. From the rip. Yeah, this and Hyperliquid have been like actually showing some signs of life while everything else just nuking. I can't even say that. I haven't like aside from those two alts, I've not looked at any of the like aside from these 6 alts, I'm not paying attention to any alt in crypto. I have no clue what's going on over there. No clue. Should kind of take a look real quick. I imagine they're all looking the same though, right? God damn, god damn. Interesting. Interesting. Look at this later. I'm kind of as expected. We need to be mindful of this thangity thang right here. So we start to lose this thing for real, and we don't just like tap this single print and go. I'm definitely closing out some of the long. I'm not gonna round trip that thing. Like we already took profit at once, but never hit the rest of our TPs. Like we were the next one was above this wick. Up here. Maybe I should have closed it when this SFP happened, right? This thing came up and just got everything. But this is like I'm pretty sure I was on the way to the Super Bowl when this is happening. Not like literally Super Bowl, but one of my friends supposed to watch it. So I don't really care if we like look at the charts or anything like that. This is like when futures resumed, right? I'm not mistaken. Yeah. Boom, boom. But we should probably watch one of those videos. And I don't watch any of them. Also, you know what? Might as well just leave them to watch on stream and chill some evenings. We are behind on those. Okay. Also, apparently that Scarface guy from those videos, I think he removed the videos. Apparently that guy was like a fucking fraud. The guy that was doing like the orb, the 15-minute orb. What's the channel called? Oh yeah. He was like posting like doctored fucking financial statements or something. Oh, he did remove it. Interesting. Interesting. Because that guy's in Toronto, I'm pretty sure. Or at least was. Hey, it ain't so. Let's close this. But yeah, you know, also these memory stocks, man, these fucking things. Where is this thing? Yeah, we definitely missed some of these. Feels fucking bad. Feels bad. I will say though, you know, that one video that we watched with the Chris Camilo guy, like the market wizard who has like talks like that really deep voice. Their podcast is super interesting. Probably one of my favorite trading podcasts now. Like Dumb Money, whatever the fuck it's called. Like they have like some of the most interesting like trade ideas that I'd never seen anyone else talking about ever. So like a lot of like very interesting alpha in there. Like they're talking about this company a while ago. These people make, what is it? It's like the glass for the GPU racks and servers. But they're like one of the only companies in the world that make glass that can like withstand the heat properly. Like the glass is like super fine. So there's like very minimal friction build up on it. And like Nvidia is like in cahoots with these people. And they were talking about this shit hella early. And I've just been sending ever since. Same with some like clothing companies. Same with like, what's the other one called? Hack, I think it is. I went back and watched all their videos and kind of like monitored how the things that they would talk about would do. Like, pretty insightful. Ahead of the curve. And interesting Reddit too. A lot of like-minded heads on that, or not Reddit, the Discord. Definitely suggested that. Okay. Let's watch one of these thingity things. Okay, we'll do this first, and I'll do that. Okay. Okay. Not that much, only 4 videos. What about interviews? Almost the same, actually. True. Okay. Dun.
Because it just meet Pradeep Bondi. In this episode,
Well, yeah, before that, actually. What is it? Sugar? I saw a pretty interesting video yesterday about sugar. And in terms of like the commitment of trader report, things is getting pretty crowded to the downside. On top of it, so potentially an interesting trade setting up here pretty soon. Fuck was the ticker?
Confuse you more than
focus here.
We'll leave this like this. Better not be another one of these goddamn like all over Kel type of videos. I swear to God. Swear to God. Don't piss me off.
Pradeep covers his episodic pivot strategy that has been used by market wizards and 7, 8, and even 9-figure traders.
This particular stock went on to make such a big move in a short period of time. Within a span of like 28 days, it went up 189%.
Is there a process that you're doing to sort of have them on your radar?
Yes, so I have a daily process every day. This is like what starts this move. Is a
He shares exactly the setup that you should be looking out for in order to have the largest edge in the markets.
This is the total playbook for EP now. So when you use this total playbook from what I used to get 5 to 10 trades in a year, you can get 100 to 300. I don't argue with the market when I see a stock which has a float of say 10 million and it trades 100 million shares in a day. So there must be some reason why it trades that 100 million shares.
Pradeep reveals his playbook like he's never done before, showing every variation of the episodic pivot.
Welcome everyone back to Chart Fanatics, the go-to channel for the best trading strategies and concept breakdowns with the best traders in the world. Talking of which, today we have an incredible trader, the founder of Episodic Pivots. He is actually a mentor to some incredible traders, future market wizards, and 7, 8, 9-figure traders. It's the one and only Pradeep Bande, aka Scotty.
Thank you for having me.
It's my absolute pleasure. Thank you for being with us today. I'm very, very excited to get into this playbook, the episodic pivots. That, as we just were talking just before we started, like this is a concept and a playbook that many traders out there have used now after you obviously graciously put it together and even started to share a lot with the trading community out there. Where do you feel is the best place to begin?
First place is to understand what really is an episodic pivot. So in order to understand an episodic pivot or EP for a short, is essentially it's a catalyst based method. Like there's a catalyst and it works on a stock which has been neglected. So the most important thing, which is like you have a stock which is neglected for a long period of time. So let's say you have a stock which is like say doing nothing or it's near low and doing nothing. And then suddenly a catalyst comes in. And when the catalyst comes in, on that particular day, the stock starts going up because there's a catalyst which has got some sort of a game-changing nature, which can be either earnings, it can be a story, it can be some new product launch, it can be a new order, CEO change, whatever. And then the stock, just like in a quickly, within a quarter, goes up 50% plus. That's what I'm looking for. So you are getting onto the stock with a catalyst on the first day of the move. And if you can ride, sometimes these moves are 50, sometimes they're 300%, sometimes they're 1000%, but they happen very rapidly. So this entire move will happen in less than, sometimes like this entire 300, 400% move will happen in 14 to 15 days.
Yeah.
And so you get a very good risk reward, and you get a very good entry also because you're right at the beginning. You buy them in the morning near the open. So you have a very close stop and you get substantial risk reward.
Hey guys, before we get into this incredible episode, I want to say a massive thank you for all of your support so far on both Words of Wisdom and Chart Fanatics. We have grown immensely. And
Is
still the
this whole
fastest
video
growing
about me just buying some like news breakout?
channels in the trading industry. Now, a way to give back to every single one of you, if you want profitable strategies completely for free, go to chartfanatics.com. The link's in the description. Put your email in, and every single week we will send you a free PDF with a profitable strategy. Let's get into this episode.
Do you find that with this, well, one, would you say that these moments and these sort of events happen few and far between, or are they quite frequent within a year?
So what happens is, like, and if you're looking for something which is based on earnings as a catalyst, then you're going to find few of these in a year. So you might get 5 to 10 trades in a year, right? But over the years, when I discovered EP, I was only trading the EPs which were based on catalyst, which was either a sales growth or earnings growth. But now what I have done is I expanded this concept, and today I trade EP family of setups. So the EP, which is classical EP, which is based on earnings or sales growth, right? And then I have this new variation of a EP, which is delayed reaction EP. Because when I started trading this particular setup, that time if a stock had a catalyst, it used to gap up 8%, 9%, 10%, at best like say 12%, right? Nowadays, if there is a catalyst, the stock will gap up 20%. It will make another 20% move in a day. So 40% move, 50% move often happens in the first day itself. As a result of that, the stock tends to pull back after that. It doesn't really immediately shoots up and goes up. So what it does is, it like, and it comes in, big move happens 40, 50% in a day, and then it like, and basically pulls back. And then after a delay, you get a second move. And so I created this another setup, which is a delayed reaction EP. So in addition to this, the third thing which I have done is, earlier the EP classical was based on just earnings and sales, but then I discovered that the market does care about earnings and sales, but it is more interested in stories.
Yes.
Stocks really go up based on stories or themes. So I have like now stories or themes. So when you look at these classical EPs, you're only going to get around 10 trades in a year. But once you start adding stories and themes, you can have 100 to 300 trades, also depending on the market conditions. And these stories are just like something which is the market catches fancy about, say like quantum computing or the Bitcoin treasuries currently, or AI. These companies may not have earnings, sales, they will never become profitable, they might never be able to be successful, but in the short run, they make 300, 400, 500% move. So stories, EPs is the third category of things. And then there's another setup which I developed, because this was again a limiting thing in terms of like and how much you can find. So I have developed a setup which is based on volume. So I call that EP 9 million, which is like a stock which trades 9 million plus volume of shares. So those are the stocks which I assume that if a stock trades that kind of a volume and it has never traded that kind of a volume, there is some sort of a catalyst, and that's a big catalyst here.
Yes.
So I'm going to take a trade based on just the volume which has come in. And again, once I develop this, I created a variation of this, which is delayed EP 9 million now. And
interestingly enough, one of the textbooks I was looking at over the while I wasn't streaming, a lot of like the automated strategies that they use in there was like literally triggered off volume.
All these, I have another setup which I developed based on EP, where I found that there are certain stocks which continuously, for whatever reason, the market catches fancy of those stocks, or those stocks are the most popular stocks in the market. So they tend to have these lot of 40, 50% moves of short duration, 5 to 6 days in a year. So I call them.
Let's just kind of look at this real quick. We're going to close out some of this trade probably. Let's look at some of this data. Boom, boom, boom. Okay, we'll close them for now. Just look at one more thing. Because ultimately, if it's gonna do this, and you like, let's just suppose it goes like ding, and then kind of reclaims a VWAP and starts to go again back into the Valley Area low, then like we'll just add back. I'm not seeing a whole lot here in terms of like any bullish edge forming as we get to here, aside from like some just random oscillators in the 5-minute. Yeah. Boom, 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 boom. Mm. Six, 7, 7, 3, 5. How much of a difference would this be? Hmm. What do we do here? There's like a massive like high leverage liquidation right here at 677 with like a single print. So definitely like a world where it does just, but there is like no aggressive buying on the long side. Okay, I'll close out less than I was planning to now, and if we start to close below this shit, I'll close out more, and then we'll add back if we start go back higher. How about that? How about that? Okay. Boom. Where were we?
Like and basically sugar babies, which is a variation of basically the same EP concept, but this is like an I track 25 stocks which have shown continuous tendency over the last 2 years to make this 50% move in a short period of time.
Yeah.
And then every time they break out or every time they give you a pullback opportunity, I get into them.
Yeah.
So this is the total playbook for EP now. So when you use this total playbook from what I used to get 5 to 10 trades
Yeah.
a year, you can get 100 to 300.
Incredible. It just shows how the concept of the actual playbook is the same, but it's just working out the variations and different ways to identify it. And so, for example, the EP 9 million, for example, is a great standout thing to be able to say is like, it's not going to be a random stock and a random moment where they get 9 million in terms of volume. There's a specific reason for that.
Yeah, and sometimes like when you look at the reason for it, it may not be like something which you logically think the stock should go up, but I don't argue with the market when I see a stock which has a float of say 10 million and it trades 100 million shares in a day. So there must be some reason why it trades that 100 million shares, right? So I'm just going to go into it.
Definitely. And then the DEP 9 million, is it just the same concept?
Concept, because increasingly what happens is on the day of the EP or EP 9 million, the stock makes such a big move that invariably it pulls back.
Yeah.
So if you like and keep holding the position, what happens is it might take out your stop, or you might lose like 30-40% of the gains which were made on that day. So I have like I trade that as 2 trades now, EP. The day 1 trade is more like a day trade nowadays because you make so much money that it is better to just lock in Otherwise, you will have a stop which is get hit, or you'll end up giving 30-40% gain which you made in one day. And then look for a delayed entry. And on the delayed entry, you get a better risk reward because
missed
on a
that.
delayed
Got
stop,
distracted.
like a stop, or you might lose like 30-40% of the gains which you made on that day. So I have like an I trade that as two trades now, EP. The day one trade is more like a day trade nowadays because you make so much money that it is better to just lock in. Otherwise, you will have a stop which is get hit, or you'll end up giving 30-40% gain which you made in one day. And then look for a delayed entry. And on the delayed entry, you get a better risk reward because on a delayed entry, you're watching it, you're anticipating. So you get a very close stop, you can put a larger size and you get more money.
Yeah.
Even though it may not make 50-60% move, it might make just 20-30%, but you know what is the catalyst. You know that there is a good entry here and you can put in 60-70-80% of your account on a delayed entry.
I understand, yeah. So this essentially is creating a A+
Wait,
scenario,
what?
especially if you get. I understand, yeah.
In 60-70-80% is, even though it may not make 50-60% move, it might make just 20-30%, but you know what is the catalyst. You know that there is a good entry here and you can put in 60-70-80% of your account on a delayed entry.
I understand, yeah. So this essentially is creating a A+ scenario, especially if you get the original trade, gives you sort of a buffer for that secondary trade where you can't even then risk more because it's giving that confirmation.
And also, like, say, what happens is like delayed
Seems
reaction.
obsessed. Is it just me or is that hella fucking suspicious? Like, what? Okay, so this guy's saying, like, first of all, let's just think about the logic behind that. Okay, so it has some like pump that goes like fucking 50%. Then he's saying you want to get in on the retrace with 60-80% of your account. But like this like, let's just assume it's like some like golden pocket 786 pullback. Still quite the distance down to like this invalidation. Like, where would you put your stop? I guess like, that'd be my question for this guy. Like, how do you put your stop on this? If you put 80% of your account with the stop this far away, pretty suspicious, right? Especially given the fact that like it just retraced the whole fucking thing. So like, how strong of a breakout is this really? Like, when we're looking at this like SanDisk stuff, like there is no fucking retrace. Like, it's just fucking off to the fucking races, right? Like, where are you getting a fucking retrace of a 50% move on this thing? On any of these? Interesting. Curious what market, like, I guess I'm curious to see what kind of things he trades with this, because he said that people with like large accounts do this, but I can't imagine too many large accounts are dabbling in some like super illiquid crap like was potentially describing.
Both of these, when you add this delayed reaction EP to this equation, you sometimes get 2 to 3 trades, additional delayed entries, right? And basically, so this gives you like the same amount of money as the EP would have.
Interesting.
With a very close stop. While in this one, you have to get in early in the morning.
Does he have some examples later? Okay, cool.
Where your
I'll have a better idea of what he's talking about.
Many times, like, you get shaken out. While in a delayed EP, you have a control over the trade. You can put in a lot more size, and you have better understanding of the catalyst. Because a lot of time you see that
it's not that crazy if you think about it. We'll have to see the numbers. Have to see the numbers for this.
And you anticipate the market to react positively or negatively to the catalyst, and the market does exactly opposite of that. So then you get like in a stopped out. While in a delayed EP, you're just like in a coolly waiting there, watching. Okay, now you make your move.
Definitely. And where do we go from here? Should we go over the pros and cons of the strategy?
Up to $6 million in futures funding. That's only possible at one place, Apex Trader Funding. You can get up to 20 in today. Now let's get back to the episode.
So let's look at like in a pros, and let's look at like in a cons of this strategy. Right?
And just for everyone at home, cons is less so a bad thing. It's more something to be aware of.
It's more like what is the risk or what are the things which you have to be aware of when using this strategy, basically, right? So the pros is basically what you get, like you get an entry right at the beginning of the move. Right entry, right, basically. But the stops which are required increasingly because the stocks are gapping up so much, like So if there is a catalyst nowadays, sometimes the stock will be gapping up 40% and still it will make 20%. So you have to use a wider stop, right? And here the con is it's a wider stop is required
Yeah.
for this thing now, right? And basically, and that's why delayed entry solves that problem, right? And basically, the good thing about this is it can move your account in one trade in increments of 20 to 50%, at times even 100% plus
Yeah.
in one trade. That's the biggest
So it can be quite a high risk to reward.
high risk reward, right? The cons is like, and it doesn't happen frequently. If you are just looking for the real catalyst, once you look at stories, it happens very frequently.
Would you say hesitation is something to be aware of if you hesitate on the entry?
If you hesitate on an entry, if you don't get in the first few minutes, most of the time it doesn't give you a ability to get in later in the day, basically, because it just, the one which is going to shoot is just going to go like a rocket, and it becomes very difficult to enter it like that way, right? Con is also you need very good analytical skills in order to do this. So this is not a mechanical. You have to see the news. You have to try and understand the news. You're trying to figure out, look, this is the news. How much will this stock move based on this news? All right. So plus you need to have an understanding of like various kinds of sectors in the market, which sectors react how to a news and what happens, right? And basically, so it requires a lot more analytical skills. And which is not easy for a new trader to develop instantly. You need to see 4, 5, 6 earnings season. By that time, you get a good handle on how this works and why certain stocks go up a lot and why certain stocks don't go up. Similarly, in order to trade your stories, you really need to now know how stories work. So it's like this is a higher order skill, basically, more than that, right? And the cons are always there. Look, and you can grow a small account.
Yeah.
Significantly.
What do you say?
Similarly, in order to trade your stories, you really need to now know how stories work. So it's like this is a higher order skill, basically, more than that, right? And the cons are always there. Look, and you can grow a small account.
Yeah.
Significantly by using a strategy like this, and which is what like traders have done, right? And they take a small account and they put in all their account. I also in the initial years I used to put all my account, or even more than one account. Like I put 150%, 170% on one trade, because you see what is the catalyst, you have the conviction, and you can put in large size. So that's the thing which is there in terms of the cons and pros. Basically.
Definitely. No, love that. Well, let's go on to the charts now. We're going to see some examples of the EPs and the different variations, and we'll take it from there.
Okay.
Sure.
No problem.
So now we're going to go over actual examples of EPs and the different variations on the actual chart, showing you what they look like and how you would go about managing these sort of positions.
Okay, so let's look at one of the best one which happened last year beginning in January, which was SMCI. So when you look at SMCI on this particular day, which was the day on which this stock had a catalyst, right? And they pre-announced that they are going to have a very good sales, and the sales which they pre-announced were like really of the magnitude that they said that they're going to double their sales, and for the next 2 or 3 quarters they are going to have 200%, 143, 100% sales growth. And sales growth, what I discovered after trading many EPs is sales growth is the biggest driver for big moves. Earnings may make a stock go up, but earnings really don't matter. The market likes stocks which can increase sales growth at 39% plus. If it is triple digit, it is very good. So on this particular day, you will see that like this stock had this particular kind of a pre-announcement, and that pre-announcement happened in the pre-market or in the aftermarket, and that day, on the day of this particular earning itself, the stock went up 35%, right? And basically the entry on this one was right at the open. When I see a stock which has this kind of a catalyst, and when I looked at the information which was available, I thought this stock has the potential to double. So as a result, for entry, I just entered it on the opening price guarantee, or what is called as a market on open kind of a trade, where you just put in an order before the market opens. These orders are called OPG in Interactive Brokers. In other brokers, they're called market on open orders. So these orders need to be created before the market opens, and then they guarantee you the opening print or the price at which the stock will open, basically. So, and then here, if you see, this particular stock went on to make such a big move in a short period of time, just like within a span of like 28 days, it went up 189%.
Wow.
Right. So this is one example of a stock where the catalyst was clearly the earnings growth. Now, last year was very good for earnings sales related EPs, where like they had these catalyst, which were like sales growth, and as a result of that, they made these big explosive moves, and most of them happened in the first quarter. And if you see this particular stock, Root, this is a second example of like the EP which I captured last year, where the stock had gone nowhere, so it was neglected for a long period of time, almost for
Why
6,
is this
7 months.
guy's?
There was no
I
news on
don't
the
know
stock.
why I
There was no
find it
reason.
so funny. This guy's mouse cursor is like fucking 5x magnified. This thing is fucking enormous.
For anybody to be really interested in this particular stock. And then on this day, if you see, this was an earnings.
my
The earnings was
God.
announced in the night, and the earnings was blowout earnings. If you look at the earnings on this particular stock, you will see that it is like, it had 56%, 173%, 264, 287. That's the sales growth which it was projecting. And the stock was a very small stock in terms of capitalization. It was like just a 100 million, 200 million capitalization stock. So based on the sales growth and what kind of a sales it was having there, right? When I looked at this stock had a capitalization which was so small that like, and I was looking at it, and it was having a sales
By the way,
growth.
for this,
They are even-
another thing I made was on okay, you can get Claude, or I guess any of them can do it now, I'd imagine. But like Claude can like get this data into spreadsheets and do the analysis on you, right? In terms of like company's balance sheet and whatnot, and like all like their earnings reports, etc. But then you can get it to make visualizations, which is nice, right? Like, it's not just all like in like a tabular format.
Having a sales per quarter which was larger than its capitalization, and in the next 4 quarters it was going to have sales growth which will make around like 500 million or to almost 1 billion in sales. Now typically stocks trade multiples of sales. Even small businesses trade multiples of sales. So my thinking was, look, this stock is at least going to triple kind of a thing, or it has the potential to double, triple kind of a thing. So here, and you'll see that in less than like basically 17 or 16 bars, the stock went up 358% before stopping me out, and after that it went up another like 55%.
So in terms of stopping out there, so are you trailing your stops per day?
Yes, not necessarily. When I see a catalyst like this, what I do is I put in an initial stop, and once it goes in my favor, I make the stop break even. And then I had a clear analytical thing on this stock where I thought that this is going to make at least 200% to 300%. So once it started making that kind of a move is when I started moving my stop. So I moved my stop here, then I moved my stop here to the low of this day, then I moved my stop to the low of this day, and then next day it like just stopped me out kind of a thing, right? Basically. So this is like an example of a kind of an EP which is a growth EP, where you can clearly with your eyes see the growth figures are so phenomenal. When you see something like this, it's not many times you're going to see figures like this where the stock has come out with earnings which are triple digit. It's also saying next 2 or 3 quarters we are going to have this kind of a sales growth. So you can like say looking at the sales growth 200%, 300%. Sometimes you get like stocks which are like 800, 900. You can just make a guesstimate that this is going to double, triple, or go up 400, 500%, and then you want to give it a room to run.
I think this goes back to your point of like, well, this is why when the stock hasn't been touched for so long and you consolidate for that period of time, when something drastically changes quite quickly, that's what creates such volatility and movement. And then back to your point about you have to be analytical, because you take that information alongside earnings and sales growth and projections, and then make a educated decision on how far can this go. And then as you can tell from your management of the trade, you're saying could double, could triple. So once you got to that point, then you're managing your position.
So in the beginning you manage it less aggressively.
Definitely need some experience. Like, I'll not be able to do this. Kind of like, sure, if I got like AI assistance in terms of like based on how much it beat the expected move you could be anticipating, it would help with that. Because like it seems like this guy does it just through his like own experience.
That there's a potential, and they start reaching that potential, then you start aggressively managing your position, and that's what happens. So this is one kind of a catalyst kind of a stock where you have a clear growth EPs. So whenever I look at EPs, I have 2 types of EPs, right? One is a growth where there is a clear growth story which the market has been caught by surprise, because the market was not paying attention to this stock. There was no reason for anybody. 100 million capitalization stock, no analyst is covering. There is no reason for anybody to pay attention to. And then the stock surprises the market.
Mhm.
When the market gets big surprise, then everybody, like, and it's not only the retail investors, but it is the institutional players who are piling onto the stock. And you can see that when this thing came in, right, only 43 mutual funds were owning this particular stock. So it was so small, right? And now 249 mutual funds own this particular stock. Similarly, if you see that example of SMCI, so the mutual funds is like, not really the retail traders which drive these kind of moves. It's the, you see, like 746 funds own
Yeah.
this stock, and now like, and it's almost 1700 at the peak own this particular stock. So they want to buy, and more they keep on buying because they know these things, right? And retail investors may not know these things, but institutions and funds buy stocks for their earnings powers or sales growth. So when they see a play like this, they're going to be like, and they have millions of shares to buy. So they keep buying for 10 days, 15 days, and that creates that continuous bid in the market. So the stock just like, and it keeps going up, and then the buying exhaust, and the game gets over, basically, right? So there is one kind of a growth as the catalyst here. There is clearly a stock which has not been growing and suddenly starts growing. This tends to happen in stocks which have IPO'd recently or after IPO. They have some time it takes for them to catch up their business or to grow their business, or something happens in the environment, or new products get launched, or new technology comes in, right? But there is a second kind of a EP which also makes a very big move, and that's a turnaround. So if a company is in trouble, or it has some problem for a couple of years, sales growth are going down, or there might be some issues with the company in terms of management or the product line or competition, and then it manages to turn around that particular thing. So good example of a turnaround EP, two examples I'll show you from, again, last year, is like Abercrombie and Fitch, ANF, right? And so what happened in the case of ANF is like, basically, here you'll see that this is where they came out with earnings, and that E indicates earnings, and they had a turnaround. And this turnaround, almost for a 6 months, 7 months, the stock kept going up. It went up to 240%. So if you look at this Abercrombie and Fitch example, what was happening is that they had a series of scandals.
Marketsurge.investors.com. Interesting. I wonder if we can compile some of this data ourselves. Take note of that.
The CEO left, he had some affair with somebody in the company, and their products line became like an dated and things like that. And then they got a new CEO. And when the new CEO came in, you see that like the new CEO came in, and there was this turnaround in profitability, which you cannot see here because this was even before this particular quarter. So they had this big 244% profit growth where they turned around everything. And as a result, you'll see the stock went up from 23 to 200, which is almost a 700-800% move as a turnaround. And it kept on like going up. Turnaround EPs tend to last for a longer period of time compared to growth EPs, because a lot of growth EPs, growth companies, they grow rapidly for 2 quarters or 1 quarters, and they can flame out because competition enters or something happens. It's a very competitive field, technology companies. While in a turnaround kind of a situation, if a company fixes its problem, that problem is now over for multiple quarters, sometimes years. And as a result of that, there is like this move which lasts for a longer period of time. Plus, what happens is, if a company goes into trouble, the company gets beaten down so much that like people really make it very cheap in terms of valuation and things like that. So as a result of this, if you see here, when this particular thing happened, the capitalization on this particular stock was around 1 billion. So it became very cheap, and the sales were high. So as a result, it made that kind of a move. So turnaround EPs, in my experience, have like a larger runway to run for a longer period of time. So this becomes important from how you manage the trade, in terms of you don't really start aggressively moving your stops and all, because this has the potential to run for 2 to 3 quarters also. So this is one example of a turnaround kind of EP.
So depending on the playbook that you're using, so in this case a turnaround, it will then differ the rules of management for the trade as well.
Yes.
Let's take a break for a minute there, guys, because I want to tell you about the best CFD prop firm in the entire industry, Funded Next. Funded Next is a proud sponsor of Chart Fanatics.
Where's the button?
And they buy that's an international make now. Hey, you are now entire global market on. Now let's get back to the episode.
What is your process of knowing when these trades can take place? Because as you mentioned, like some may be just stagnant for a long period of time. Is there a process that you're doing to sort of have them on your radar?
Yes.
Because you have to move
Yes.
quite quickly once
Mhm.
once they do begin to move.
Yes, so I have a daily process every day. This is like what starts these moves is a new information is released, right? So new information is released in terms of earnings for a press release, right? And basically, so this information is released by most companies after hours or before the market opens. So I have a process every day. I look at stocks which are going gapping up in after hours, certain magnitude and certain volume, and then I go and start looking at what is the news, what is the catalyst, and then create my identify the stocks either in the night, some in the night, some in the morning. And then before the market opens, I will have a list of stocks which I'm going to be entering. Or sometimes I enter them first thing in the morning, or like I enter them after they open the first 5 or 10 minutes, looking at how they react, kind of a thing. So there is a there is a detailed process, step by step. I have websites which I monitor for other things, websites which I monitor for news. And nowadays with this AI coming in, once I find a series of candidate or once I have a probable candidate, I use the AI tools like Perplexity AI, Claude AI, and Gemini AI, and some of these AI tools to then ask them to analyze, look, what is the news on this? Is it bullish? What is the bearish? Which funds are owning it and all? So there's a checklist process, and if it meets my criteria, then I put it on my radar, basically.
Perfect. So you're able, a lot of the time the news is one, planned, but then two,
I haven't
they
tried
will
that
be
one
coming
yet.
before the market.
Perplexity. Perplexity. That on there. Probably that one's pretty good for finance too, interestingly enough.
Open, so it gives you that window of time to be able to then put together a thesis and decide if this is a trade you're looking to take or not.
Yes, by 8:30, I have my list of candidates which I'm going to target.
Okay.
Now, what happens is this is where I have another setup which I developed, which is like more a day trading setup nowadays. It's like this is finding an EP is like trying to find a diamond, right? When you go to find a diamond, many days you're not going to find a diamond, but you go to find a diamond and you find a ruby, so you don't throw it away. So many times I go to see, but I know this stock is not going to be one which is going to make move for multiple days or multiple months, but it is going to move today 20%. So then I call that stock in play and I trade that just for a trade.
Day trade, yeah.
Because even 5-6 trades like that is almost equivalent to doing an EP.
Exactly.
If you get 10% or 12% in a day, it all adds up, right?
Definitely. And then those trades almost can provide more capital for when your EPs come along.
So I'll show you another example of a turnaround which happened again in the last 1 year, like in a rail, right? And basically, if you see here, this stock went up in like a 266% in 2.5 months.
Wow.
And again, if you see before this stock was neglected. There's nothing to get excited about this stock. Nobody was interested in this stock. And what happened is their earnings came in. And this is a company which makes the rail wagons or things like that, right? And basically, and then they had this kind of a earnings turnaround. And as a result, the stock just like an event up like basically, right, 99%, 66, 83%. So this is a cyclical industry. In a cyclical industry, when the cycle is bad, the companies really have low growth rate or sales growth go down. And then when the cycle turns, suddenly like they will have a big move. So this is two types of EP. One is a growth and the other is a turnaround kind of an EP. Now, there is another kind of an EP which I am nowadays more focused on, which is delayed reaction kind of an EP.
Yeah.
So for a delayed reaction, let's look at an example of a delayed reaction EP, and that is which I did just like a month ago, HIMS, right? So now HIMS and HER.
And this thing is nuking right now. Mega nuking. God damn. HIMS is nuking.
It's gone up a lot also, like a couple of times. It's like IPO'd and it's made a big move. But this particular company had gone down, almost like the stock had gone down 62%.
Wow.
And the reason why it had gone down was because this company basically like it gives you this Wegovy and all these drug loss or weight loss kind of drugs without going to the doctor, basically. That's their model, right? And when there was a shortage of all these Ozempic and Wegovy and all this stuff, they could compound their own medicine and sell it, and they're making big profits doing this. And then the shortage of these medicines, the weight loss drugs was over, and as a result, FDA told them you can't do compounding, so the stock was down, and this was an overhang on this stock. And then on this particular day, the news came in that like they had tied up with Novo Nordisk, which is the manufacturer of Wegovy and Ozempic, that they will be officially allowed to prescribe and sell
Yeah.
this particular medicine. But that day, the stock actually didn't react like it opened and then closed lower, right? So, but like I was very convinced that this particular catalyst is a valid catalyst, even though the stock market really didn't immediately go up. So I put it on my radar. And also on that particular day, if you see, it traded like almost 152 million shares, right?
Wow.
And that volume was the highest volume it has ever traded in its lifetime.
Yeah.
Right. So I said, no, this catalyst is still valid. What I'm going to do is I'm going to wait, and I wrote down the catalyst there. I'm going to wait for a delayed reaction. And on this day, I entered the position, right? And then the stock went up and made a big move, basically, right?
In terms of entering that position there, where would you then look to place your stops for this?
Whenever I enter, I put it my stop at the low of the day of the entry, basically.
Okay.
Or like, and in this case, I put my stop on this particular this thing,
Mhm.
right? And I was anticipating this, so my entry was very good. I entered like when it was it opened negative for the day.
Yeah.
I was watching it. I like when I have these delayed reaction EPs,
Mhm.
I have a watch list and I am watching them like a hawk.
Mhm.
And the moment intraday it went from being red to green,
Mhm.
then I bought it.
Guys.
So I got a good entry, and then it went on to make a big move. So these delayed reaction entries are like in a lot of these.
How much should that have been then? Or was it? May 2025. Am I cooked? Like what? Yeah, I'm mega cooked. I was gonna say. That's still a lot, right? That's still a lot. 80, if you put in 80% of your count and risk losing 5% of it, that's like a pretty pretty risky. We'll say that, pretty risky.
On this particular this thing,
Mhm.
right? And I was anticipating this.
I'm
so my
gonna
entry-
assume that they just like that 80% statement will doesn't like when he mentions the range, when he says 60 to 80% kind of thing, it's like gonna vary a lot based on like how far your invalidations, etc.
It was very good. I entered like when it was it opened negative for the day.
Yeah.
I was watching it. I like when I have this delay, it will do okay. But similarly, I did Netflix as a delayed reaction here. So in the case of Netflix, they had this earnings on that day, and they said like they were getting a lot more customers, and they had like a lot more new sign-ons. But the market didn't really react positively. It opened, gapped up, and it spent rest of the day going down. But I was convinced that this catalyst is good.
Mhm.
So I entered this trade on this particular day. And now this is a big stock, so it doesn't make crazy moves. And the market itself went down, so it went down after that. But I entered it as a delayed reaction here.
Yeah.
So delayed reaction EP is like an increasingly my entry of choice, because on the day, like see here is another one which I did Reddit. And in this case of Reddit, what happened was like on the day of earnings, it had such a big gap that like it went up 41% and then ended up giving up the gains. but the catalyst was valid. So I entered here and then it went up.
Yeah.
So delayed reaction gives you a much better risk reward. And most people, they are interested in that stock on the day of the earnings.
Yeah.
And then they drop it.
Mm-hmm.
And that's when you get an opportunity, right? So I keep a watch list of like delayed reaction for like at least 1 month. So after the catalyst, for 1 month, I'll monitor it.
Keep watching.
I keep watching and I get it.
Fine.
Yeah.
And on the short side, because EPs work on the short side also. For short side, 99% of the time, I only enter on a delayed reaction. Because what happens in the shorts is like if the stock gaps down, there is a tendency for the market participant to buy it, saying, oh, worst is priced in, and it like and it rallies for a few days or something.
Yeah.
And then the real move starts.
Yeah.
So for shorts, I always do delayed reaction because it just allows you to get very good entry.
Yeah, and provides almost like a confirmation-based trade versus just taking that first initial move.
And also, like, and I see here, like, and I did this good trade on delayed entry on Mobileye, right? And sometimes I get stopped out on the day when the negative this thing is catalyst is like, see here, Mobileye on this particular day came out and said like, their sales growth is going to be terrible. Like they guided down for that their sales growth will be minus 44%, right? And then the stock gapped down because it gapped down a lot. There is this tendency to buy back gap downs, right?
Yeah.
And it rallied, and I was watching, and this day I shorted it, and then it went down around 20%.
Yeah.
So delayed reaction EP is like such a less stressful way to trade these big moves, and gives you a multiple opportunity. Sometimes you get 2-3 shots in the same stock. So.
Would you say that a large part of this, because this is in its nature, it's simplistic in terms of how to, the actual trading element of it, but regardless, though, the most important thing to do this successfully will be your process and your ability to decipher information, and off the back of that, create your thesis, your plan of what you expect the stock to do, how far it can run, where to start managing your trade, where not to manage your trade, and let it play out. So the real emphasis is more so on that process to do this successfully.
Yeah, see, EP as a concept is in public domain. Like, and once many people like Christian Kulamak is one person who's popularized it a lot when he made money. But before that, also there was another trader who was a member, and he made big money trading that particular idea. The idea is very simple, right? But the age is like in the process. The age is in having the right kind of a technique in terms of entering, exiting, keeping track of them. And that's true of many of these things in the market, right? And age has to be created through execution. Age has to be created through managing the trade. Age has to be created through sizing of the trade. If I find a trade which is like SMCI or Root, and if I just put 5% of my account, I'm not going to do justice to the idea. Yeah. Right. So these are what creates uniqueness, or like what will differentiate between two traders trading EP as a concept and somebody making a lot more money is how much they are risking on it, basically. And especially on these, nowadays you have these thematic EPs or story EPs, which are making such a big moves. And many times I personally find it challenging to put a big amount of money on these thematic story EPs, because I know that this is a con, this is a complete useless piece of shit company which is making this ridiculous claim, right? Basically. So I hesitate to put in a bigger size, but I have StockB members whom I trained, and they don't hesitate. They put in 100% of their account, and they make more money than I make, because I find it very difficult to put more than 20-25% on something which is just, is fugazi. It's like there is no way this vertical plane is going to take off, right? And they're just selling you some shit. But if you can take big sizes with the same exact idea and enter.
The thing about this, this is a method of trading. Not for everyone, we'll say that, right? This is not for everyone. Because one, you can't really quantify this, right? There's no way it's not like a quantifiable strategy in a sense. And second of all, a lot of these things can be subjective. So it's like, just because you think something does not mean the entire market does.
Returns you get is different.
Let's take a break for a minute there, guys, because I want to tell you about
You definitely have to have a good sense of what's really going on.
Incredible sponsor, TradeZeller. TradeZeller is the #1 trading tool today. Now let's get back to the episode.
In terms of being able to handle that size and more start to develop a playbook around EP. What would be your suggestion to traders out there in terms of, do you think the best thing to do is kind of what we've gone over today, where you go back in time and sort of understand and visualize and see how these stocks have reacted, how long they were stagnant for, what was the catalyst, what sort of percentages are we talking about? Is that the process that traders should be doing when looking to first observe and sort of understand EPs?
Yes, it's like you have to go back into history and study many moves, and I would not go back like 5-10 years. You can just study last 2 years. There are so many big moves like this has happened in the last 2 years itself. And then start analyzing, look at what was the catalyst, what was the news, and what was the sales growth, what was the earnings growth, or if it is a story stock, what was the story? Was there because the story stocks moves in herd. So currently, like AI, the crypto treasuries, and anything to do with robotics and all is moving, right? And basically, but during COVID-19 time, you had like work from home stocks going up, and you had like there's all different categories of stocks. So you have to know what is the theme which is operating, right?
Exactly.
So one thing is to do it by using a deep dive kind of a thing on the past. But the best way to learn also, even once you do some homework, is to on a weekly, day-to-day basis, see if a stock is up 40% today, right? I want to find out why it went up 40%, analyze, see the news, and then next day morning, see if I can find a stock like that.
Yeah.
So once you keep doing it for 2-3 quarters, is when you become good at understanding what news is likely to move which stock. Right?
Would you say, was there any examples of the 9 million volume?
Yes. So 9 million EP is my main EP thing nowadays. I always use 9 million EP basically. Almost everything which is like nowadays is a story stocks kind of a thing will be a 9 million EP, right? So whenever you see, like in this particular case, Oklo, which is like which makes this small nuclear, or it claims that it is going to make these small nuclear reactors, right? And basically, so I started looking at this stock, or it came in on my radar when it traded some 15 million shares, and it had like this particular move, right? And then I started monitoring, and then I traded it here. Here again, it had a 9 million breakout. So if there is a 9 million breakout, and if it is at a start of a swing, I just go in, because I know that the 9 million volume itself is a catalyst for that particular move. And what I do then is I have a simple scan which I run, and which is where I'm looking for stocks which trade more than 9 million per the day. So this is I just see stock which are traded, and I don't trade stocks below 3. So if any stock has traded that kind of a volume, right, I will put it, and I will start analyzing that as to why. Like yesterday, FAT now traded 53 million shares. Its float is 59 million. That's there's a catalyst there, some drug approval or something from FDA, right? So this stock now, I didn't trade this yesterday because the news came in, I think, intraday or something. So it will go in my stocks to watch for a delayed reaction in case it sets up, and then I will go and do it.
So almost the 9 million is it's a filtering process.
It's a filtering. It's a criteria which you're saying that if abnormal volume itself is something which is an information, right?
Yes.
These things are
Why
most fun,
did this stock trade more than its like you see sometimes stock will have a float of 5 million and it trades 50 million shares. Right. One of the best trade which I did during the COVID-19 time, where I didn't even understand what was happening, was on a speaker called SPCE, right? And this stock has had a reverse split. So the past chart, I really don't show the volume right and all. But what happened was, I was just looking at this particular stock, and that day, Donald Trump was the president, and he announced that he's going to have basically a space force.
Yes.
Right. Now here is how market operates, right? And we are going to launch space force. So everybody goes scrambling around to look for some company which has space in its name, right? So this particular thing had SPC, which sounded like space, right? So it traded more than 9 million shares, and I said it sounds interesting. Who am I to argue with it? And the stock went up 134%.
Wow.
And I had no idea, right? And again, after some days, there was another news item, some months, and then 97 million or some shares of that stock traded. And I said, if 97 million shares traded, there should be something here. I'm just going to put 5% of my account on it. And it went up some 100-200%.
Wow.
So a lot of time I traded these 9 million EPs just because there is volume.
That's it, yeah. Especially because if it's not been seen for a long time or ever, that's just telling you there's so much people stepping in. The volatility is
You're just following the crowd, right?
Yeah.
And it works. And especially when you do delayed reaction, after that, like, you know that there was so many buyers and the stock didn't go down. It has gone sideways after that. So there are fresh buyers which are going to come in.
I love that. And if people were interested to learn more and sort of start to dive deep into these setups, what would you recommend to them to start doing or to do first?
I think basically most of what I do is in public domain now. Like there are thousands of ex-StockB members and people who have gone through StockB site, and I have a YouTube channel, I have like site and on Twitter, and there are a lot of people who are doing this and they also talk about this, and so there is so much information available for people to learn this. This is retail traders. If you say EP today, they all know EP, or they trade a variation of EP nowadays. So it's in public domain, and I would say that just look at even Krishnan Kulamagi has like a bunch of resources on his site where he has talked about EP. There are other StockB members who have done this. On Twitter, every day you will see people giving examples of this kind of trading. So that some of the things like my recent work, which is like EP 9 million and sugar babies and the variations, delayed reaction, is not so much in public domain because I've not really talked so much. I don't do so many interviews or things like that, or like I've been just lazy. I don't do YouTube videos and all. I do a lot nowadays. I don't do it. But information is available. I think the information is not the problem. What you have to take the information and convert it into a process. Yeah. Right. There is always this gap between information and converting into a real process and converting into an age, and which is sometimes difficult, or it is easy or difficult depending on your personality, depending on how systematically you go about doing it, basically.
No, I love that. Well,
the market are not easy. They're constantly changing. I've been doing this for 25 years, and I can tell you that it is not easy still for me also. You still go through phases where you struggle. The market can be choppy and things like that. So yes, information is available. To make it work for you, you'll need to put some effort.
Definitely. No, well, Pradeep, thank you for being with us today. I know, as you mentioned, haven't done many interviews, etc. So we really appreciate you coming and sharing this time with us. Everyone at home, drop a comment with your biggest takeaway from this episode. Any questions on what you've seen or any of the concepts, drop them in the comments below. Myself and Pradeep will take a look at that. But links to Pradeep and StockB will be in the description.
Pretty interesting stuff to go check out in regards to that interview.
Now. Hit like.
Pretty interesting, I suppose. Which one should we watch next? Maybe we'll do this because it's relatively short. And I'm not feeling too hot. I'm about to go. Actually, before we start this, I'm going to go get something to snack on and take some medicine. Okay, let's bang this thing out and get out of here. Boy, I'm tired. Boy, I'm tired. Tired as a motherfucker.
That you think is so good, why are you wasting your time pointing and clicking? Find a programmer, spend the money, do it. For my strategy, I look at three things. I've met a lot of people over the years. I could literally sit next to somebody who's trading a specific strategy, and what I found incredible throughout my career is that if I were to go and trade that same strategy as them, they're gonna outperform me every time. Now, why is that? Well, it's because it all comes down to the end.
This futures trader has traded hundreds, if not thousands, of E-mini contracts a day.
Most traders will go and they'll learn from another trader and they'll see a trader execute a strategy and they'll say, wow, that trader's doing extremely well trading that strategy. Well, that trader is the best executor of that strategy. Most retail traders are losing because they're using this. I was a trader that was either fading rallies or fading breaks. And I said, how do I prevent myself from doing this? I said, Anthony, you have not identified market environments. So then I started looking at, this is how I started this strategy because
Introducing 20-year trading veteran Anthony Crudell. He goes through in this episode the exact 3 specific elements of a trade that he looks for before executing.
that's where I get killed historically and presently. Everything's a daily for me. Even as a short-term trader, I started using this when I was scalping a ton. It was more about understanding what environment we in. This helped me slow it down even for the short term. So when I see this, what does it tell me? Right? It tells me
This is exactly how you learn to trade full-time for the long term consistently.
I'll day trade if the markets are really busy. Most simplest way I can look at the market is just what is.
Welcome everyone to Chart Fanatics, the go-to channel for all of the very best trading strategies in the world with the very best traders in the world as well. And today we have a very special guest, a true trading veteran, is the one and only Anthony Crudell.
Riz, thanks for having me.
My pleasure. My pleasure. Thank you for being here. And I know today we're going to go over sort of a strategy, and we're going to start here on the whiteboard. Where should we begin when it comes to that?
For my strategy, I look at three things. Are we in mean reversion, consolidation, or trending? So that's where it all starts for me,
Yeah.
right? And I think it's important to identify what style of trading that I do these days. And for me, I'm swing trader. I'll day trade if the markets are really busy, but most of the time I'm looking at a position for 1 day to, let's call it 5 days.
Yeah.
Now that's a typical hold time for me. And I look for the most simplest way I can look at the market is just what is the type of environment. And then once I go from there and I identify what type of environment it is, then I just really execute directionally. So I just pick a side once I know what it is. So if it's mean reversion and it's back in trend, then I'm only in that mean reversion look. If it's trending, I'm only in that trend. If it's consolidation, it's two-way tape. Typically, as a multi-day swing trader, I will get chopped up in that type of scenario. It doesn't mean that I won't do it sometimes. It's really dependent on what the overall primary trend is. So if the overall primary trend is bullish or bearish, and we get into a consolidation, I'll lean more into what primary trend is. So it starts off with Bollinger Bands. I use 20-period, 3 standard deviation Bollinger Bands. And we joke because, nowadays a lot of people aren't using Bollinger Bands. It's an indicator, that's been around a long time. And we kind of joke a little bit sometimes.
3?
On the
Interesting. Interesting. We're almost at the low. Like 3 hours. How long have we been streaming for? Almost 3 hours. God damn. God damn.
Ninja Trader Live, like we call them boomer Bollinger Bands. I'm not a boomer. I'm Gen X though, so just for the record, not quite a boomer. But what I like about them, and I think with any indicator that you use, I can look at them and in a few seconds I can identify those three things. Is it mean reversion? Is it consolidation? Is it trend? And that to me is so important because as a trader who likes to keep things super simple, I like to look at my charts and understand that immediately. So I could be gone for weeks. I can go and travel, the world, do whatever I want. I can come back. I can open up the chart, and within a few seconds, I know exactly what type of market environment we're in. And you really can't buy that. I don't think with some of these other strategies, just the simplicity of it. So the first thing I want to look at is, so a Bollinger Band, now, a 20-period 3 standard deviation Bollinger Band, most of you guys, if you open up your Bollinger Band, it's going to be a 20-period 2 standard deviation Bollinger Band. And all that means is when you're looking at a Bollinger Band and you're going to see the band, most of the time you're going to look at them and it's going to look like this, okay? Now, when you get to a 3 standard deviation, it's just going to be further away, right? A 2 standard deviation is going to be closer. Most people are probably looking at them around like VWAPs or stuff like that. You look at
the alarm went off. Single print has now been tapped. Candle closes in 6 minutes. Yeah, if we don't close above this low, I'm going to do the other shave. Basically. Bum. So we'll keep watching over here.
1, 2, 3 standard deviation. So I use a 3 standard deviation. It's really the sweet spot for me because I trade indexes, S&P, NASDAQ, Russell. And so that 3 standard deviation gives me just enough room to see, enough away from the current market volatility to understand what I'm about to show everybody.
Got you. In terms of the Bollinger Bands, though, as you said, like it's so interesting because a lot of the traders today are anti-indicator for whatever reason, but then you go back just a small amount, and a lot of the professional traders have some form of indicators. Either it's the Bollinger Band, or a lot of the time it could be like the RSI. They're the two that seem to be very popular and very prevalent, and they're very simple in terms of what they're telling you. It's kind of more so areas of interest, like areas where price could go to, areas of where we're overbought, oversold, or where we could start to notice a slowdown, and that's all it is. And I think a lot of people assume that when you hear indicators, like, oh, you're relying on this thing, when in essence, it's really just like a background information, right?
Yeah. And the one thing is that it's not the indicators you use, it's how you use the indicators.
That's true.
Okay. And so if I sat down with John Bollinger and showed him how I use Bollinger Bands, he'd probably be like, what is this guy doing? Right. And I created my own indicator. I called it Beacon because I wanted to show me the light, baby. Right. And so I'll explain what Beacon is in a moment, but it's ultimately, again, it's just about how I execute and how I want to execute. See, most traders will go and they'll learn from another trader and they'll see a trader execute a strategy and they'll say, wow, that trader's doing extremely well trading that strategy. Well, that trader's the best executor of that strategy. That's the reason why they're so successful. It's not the strategy itself. And I know some people may argue that, but that's really what I believe. I mean, you can look at anybody out there, and I've met a lot of people over the years, and I could literally sit next to somebody who's trading a specific strategy. And what I've found incredible throughout my career is that if I were to go and trade that same strategy as them, and unless it's completely systematic and it's buy here, sell here, they're going to outperform me every time. Now, why is that? Well, it's because it all comes down to the execution. And this is why I'm very directional based, and why I look at things super simple. And I usually just pick, I do just pick one direction. The only time it's two directions, again, is consolidation.
Yeah, that's true.
Hey guys, before we get into this incredible episode, I want to say a massive thank you for all of your support. Subscription. Let's get into this episode.
So let's talk about that. So when you look at a Bollinger Band, and let's just, we'll draw some candles in here, or just, these are just going to be bar charts, right? If the market's doing this, what is this ultimately seeing inside the Bollinger Bands? What's ultimately happening is we're going into a point, anytime the Bollinger Bands are coming in and you just see them like this, and maybe we came from a time that was like this, right? Anybody can go and look at Bollinger Bands and see, you've seen many times where the market has done things like this. And ultimately, this is what you get into, and you get into this consolidation phase, right? So anytime I see this, where Bollinger Bands have contracted, and I were to look at this, let's take a different marker here, and let's just look at this scenario right here. From this point on, consolidation. You got Bollinger Bands coming in, right here, see that? So you've got contraction. you've got really ranged prices. Most of the time, you're going to see that. Very seldom are you going to see the market making a higher low in this moment.
Yes.
That's just the way it is. I mean, the Bollinger Band is going to be at its peak or near its peak or opening up when the market's making a high or low. In this situation, almost always are we coming off of a high or a low, right? I mean, there could be some rare instances, but for the most part, this is what you're going to see. So when I see this, what does it tell me, right? It tells me two-way tape. I could be long, I could be short.
Yeah.
I then what do? I go down in time frame.
Okay.
Why? Because when you go down a time frame, anytime you're in a consolidation, short-term technicals matter more. See, a lot of people will look at longer-term charts and they'll look at them and say, oh, you know, we're in this big bullish trend or we're in this big bearish trend, and they'll try to execute that on the short-term charts. And what's happening is the longer-term trend just overpowers them, right? And so it's too hard to manage the risk. So maybe they're right in direction and lose money or what have you, right? And so they're not position sized correctly to take advantage of that bigger move. So if you're one of those traders who understands and looks at bigger primary trends, you want to expand you want to be trading your position sizing more according to that time frame.
Yeah.
Right. But when I see this, it's like I can't have a big picture view, even if we are in a bull market or a bear market. I down my time frame to 60, 30 minute, or even 3 minutes, which would seem weird as a short-term chart for someone like me who's multi-day holding, but I'll use it just to help me get in. But I'll look at the short-term technicals to see if I can find some nuance within the charts in those moments to execute my trades.
No, I love that. And I love the fact that when you identify that with consolidation, rather than sort of either stepping away, at least going to see more information and understanding that's when you can be looking at two-way directional. Because
This one's going to close below for sure, right? Ciao. Let's do this thing. Cool. Yeah. Good decision to shave a little bit earlier, right? To start taking off. In case we do keep rolling over, which seems like it. The cluster was like right here, so if we were gonna kind of just ding, probably would want to be seeing a bit stronger reaction, like a pile of drive down. But there's like more liquidity, like on like this whole zone was like a big cluster. So still a world where we kind of tap this one and go, but if that happens, we'll add back, right? If we like reclaim like the VWAP and reclaim the value area low after tapping this, then we'll add back, or we start to do like any kind of reversal here. For now, we'll leave it like that. Leave it like that. Where were we? Where were we?
a lot of people will just kind of try and stay and try and find the opportunity that's going to break out versus understanding that we're in this period of sideways action. So let's step down here to see what that action actually looks like.
This is when the majority of the people are going to get chopped up. And so just imagine if you drew like a line like right here, right across and just these things. And I did those kind of on purpose. Fake breakout, break back to the range. Fake breakout, break back into the range. Fake breakout down here. If I did the same thing, back into the range.
Yeah.
So if all of a sudden you're trying to chase longer primary trend here, you're just getting hosed. So you have to recognize that anytime you get outside of these ranges when we're in a two-way tape and consolidation, the likelihood of us coming back into that range is high. And so I almost look for like stop runs above recent highs or lows and just to come back in the range. But again, this is when I can get chopped up a lot. And I think most people can relate to this. What ultimately happens is all of a sudden that one day is the day that we go lower, we go higher, right? And you start to end up really getting screwed, you know, because you're just over trading the tape. But when I see this, my thought process is trade.
I'm gonna brush my
the
teeth
edges
real
of the
quick.
range. Stay out of the middle.
Yeah. No, perfect. And then where do you go from there then after that?
So from there, I mean, as you can see, what happens, there's only really two scenarios that can happen from here. We start trending higher, or we start trending lower. There is no, because either we're in a two-way tape, consolidation, or eventually, what? We're trading higher, okay? Trending higher. Now, it's never perfect, but let's just say, right? It goes up like this. Now, ultimately, what are we looking at next? What happens, what I look for is this moment right here. Let's use a different market. Let's go to green on this one. What happens right here? And everybody can see it. What happens is the Bollinger Bands go from being flat to start pointing outward.
Yeah.
What does that mean? Expansion. Anytime you have range expansion, you then, depending on the direction of the market, right? If it's expanding, the Bollinger Bands are going up and we're hugging the top Bollinger Band, or we could be going down like we have been a lot of what this year is. We're now expanding the range, the potential to expand the range in that direction.
And then from there, what are you looking for? Would you be looking at when you break out? Is that where you're looking to try and enter to follow that movement?
Exactly. You break out of this high, right? And now the Bollinger Bands are expanding out, right? And then one thing that I want to keep an eye on is I want to keep an eye on this previous peak over here. And I'll talk about that in a little bit, why that matters in this peak over here.
What time frame would this? I know you said in the range you drop down time frame, so this would be the daily.
Everything starts with the daily for me.
All right.
And it starts with the daily because the daily sets the tone. Again, know your time frame. I don't care what strategy someone's using. Again, I've talked about this. It does not matter. It's the best executor of that strategy that gets the most out of it. Otherwise, just automate it. I don't even know why you would want to go and put any discretionary measures into it. Because if you have a strategy that you think is so good, why are you wasting your time pointing and clicking? Because find a programmer, spend the money, do it. Now, if you say, oh, there's a discretion this because there's discretion that, and do it. Okay, I get it. Still find a programmer. And if you find your A setup, let that automatically execute for you. Remove the discretion as much as you can. Most retail traders are losing because they're using discretion too early on. They don't have the experience to do it. So why have a systematic strategy that everyone says works? Then just automate it.
Yeah, that's true.
Don't tell me that, it works great, but yet you're not making money. Well, then there's something wrong there.
Yeah, there is,
Up to $6 million in futures funding. That's only possible at one place, Apex Trader Funding. You can get up to 20 accounts at Apex. No other in futures funding today.
So I use discretion in mine. And what I do is, and we could talk a little bit about it. I know we're more technical here, but I build a macro theme, like what's happening within the marketplace. And this year, you can't look away that there's tariffs. We've also got, gold making new all-time highs. You've got the bond market becoming really volatile. You've got, the dollar moving against currencies, volatility's up across the board. So you've got a higher VIX. So now that plays a role into what's happening, right? Like I am not going to be in that environment chasing a market higher, even on a daily Bollinger Band. I'm just going to position size lower. If I'm going to be long, period, in these conditions, I'm going to be long smaller.
Of course.
So that's the discretion that I use. I'm going to be long smaller. I'm going to use options that are maybe a little bit further out, and I'll adjust how I get in and out of that position, because now I have to withstand volatility. And if I'm going against what I think the overall macro theme is, I have to be small enough to be able to withstand a little shimmy shake, be able to maybe let that trade work out. And if it doesn't work out, it's a smaller hit versus like me, hammering the tape. And when you've got macro coinciding with technicals, then it's like, then I'm all in.
Yeah. No, that makes complete sense.
So I just wanted to kind of make that point because, again, it's all about execution to me. So in this situation, the only thing I'm looking at right now for me is long only. Anytime I see this happen, we get this Bollinger Band starts breaking to the upside, this one's to the downside, expansion, make a higher high, right? And this Bollinger Band starts going that way and the market takes out these previous highs, I'm long only, period. There's no debate on that.
Yeah.
This is how I started this strategy, because what happened was I was a trader that was either fading rallies or fading breaks. I like to be a contrarian. Can't help it. That was my nature. And I said, how do I prevent myself from doing this? I said, Anthony, you have not identified market environments. So then I started looking at Bollinger Bands, and this is back in like 1999, 2000. And I'm looking at it and I'm like, man, it's like, we go from the straight bull market, 2000 bubble, market's going straight down. It's like I go from just, look, everyone's teaching me to be long, and all of a sudden you got to learn how to be short. And it's just I'm just getting blasted. And I'm like, listen, man, I started looking at Bollinger Bands, and we've all been through this. You spend the thousands of hours on the charts. And this ultimately, again, I could sit down right now and look at this tape. I know I want to be long only. I don't care what the macro is. I know we came out of a two-way tape. I know the primary trend is up. Period. Because we came from a high here. Bollinger Bands did this consolidation. We made a higher high in this from this range. Expansion, long only.
Yeah. And so I would imagine short only would be just the flip side.
Just the flip side. Yeah. I mean, if we just turn this around, and you did this, we look that way. Yeah.
Exactly.
I mean, I know this year's a bear market, so I know that maybe I should have done this in the bear market.
No.
But
it's the exact same.
Easily transferable from bull or bear. And again, we could just draw the lines down here, and everyone can look, and it's the same type of scenario, right? Now I'm short only, do not fade it, right? And so it depends on where we are. A lot of people, traditionally, you'll see people with Bollinger Bands that look for like the peak up into the Bollinger Band, and that's a short. I'm not saying that that's something that is, this is why I actually went to 20 period 3 standard deviations versus 20 period 2 standard deviations. Put up a 2 standard deviation on the NASDAQ. It gets it like on a normal day right now. It's nothing. So you need a little bit of room. And so I also didn't want to be like, oh, we're overbought or oversold. I tried to remove activity from my trading, even though I was a super short-term trader. But over the years, I don't care who you are, everybody, you're going to trade less as time goes by. That's just the way it is. You're going to want to get a stronger hand in the market. And, you'll take some of the things you learned on short-term trading and you'll apply them to, longer trading scenario. But ultimately, this is the gist of it.
And in terms of like entries and targets, where would you, in terms of this breakout, would you just be entering on that daily stops below the recent low or the previous day low?
So here's the situation here. So in this situation, when we're breaking out, what I'll start to do is I'll go down to a 60-minute chart, and it'll help me with targets. I'll also use other people, for targets, like bigger picture targets, like my friend Pax, who I know what his bigger picture targets are. So I'll look and see what those are, and I'll do something like that. So I am someone who'll actually use other people's, big picture levels, because I'm one directional trader here. So I almost, you hope you never get out of the position. It's kind of what you want, right? But the reality is, the way I manage it is, it's going to depend on futures or options on futures. Most of the time, it's options on futures for me these days, just because I can hold the position through the volatility and I can stay with it. So in this position, I'd be buying calls probably multiple days out. I wouldn't go too far out. Never. I usually go 3 to 5 days out because I just think that we're going to keep running higher. And so what'll happen is I'm just scaling out as we go. And ultimately, I'll look for like what some other people's bigger picture targets are. Or one thing I'll look at, and remember I told you about this Bollinger Band? That's a target.
Got you. Okay, the previous
high. I consider this unfinished business. Because in this move higher, what happened was the Bollinger Band made a peak. And the Bollinger Band was going. And ultimately, when the Bollinger couldn't go anymore, it stopped. So I look at this area right here as what I consider unfinished business. This is a 3 standard deviation move. So if the market were to continue to go higher in this moment as it trends up, that previous peak becomes a target.
Got you. I got you. Okay. And then in terms of, let's say, as you said, some people would look to short here. If you were prices up here, starts to come down, you're not looking to short yet until you get this move again and then this breakout again. Is that right?
So let's get into phase 3. What was the other one, right? We said consolidation, 2-way tape. We said expansion, long only or short only. What's next? Mean reversion.
Yes. Okay.
So a lot of times what's going to happen is this: you're never going to pick the top, or never going to pick the bottom. Nor do I suggest trying to even do that. I've tried; it's never happened.
think everyone has.
It's just never happened. I don't
Seems
know why
odd
that
though.
is. It's
Like the
hard to
way
imagine it.
TTPs on this seems odd. Like. 'Cause there's a lot of ways to do this, right? To like you just have like a trailer using moving average. Like yeah, sure you can take partials at these spots. You can also wait for the Bollinger Band to like change slope, right? If it's just sloping higher and higher, etc.
Up here, starts to come down. You're not looking to short yet until you get this move again and then this breakout again. Is that right?
So let's get into phase 3. What was the other one, right? We said consolidation, two-way tape. We said expansion, long only or short only.
Mhm.
What's next? Mean reversion.
Yes. Okay.
So a lot of times what's going to happen is this: you're never going to pick the top, or never going to pick the bottom. Nor do I suggest trying to even do that. I've tried; it's never happened.
think everyone
It's
has.
just never happened. I don't know why that is. It's hard to imagine. And when I've sold a top or bought a bottom, I didn't know until way later because I was way out of it. So ultimately, what might happen is a scenario like this, where the market makes a high here, and then ultimately you see this happen, and then you see that. Now, in this moment, the Bollinger Bands start to come back in, and everyone's like, "Well, you missed the top." Yeah, no kidding.
Mhm.
I'm not trying to catch the top.
Yeah.
But now, what am I doing? I'm no longer long.
Yes.
Right now, I'm looking at mean reversion. So what do I look for? In this specific instance, what I'll do is I take a Fibonacci retracement
The math. Yeah.
and I look for, this is the 50% line in a fib, and they're not traditional fibs, so I'm sorry for you purists out there. Again, I don't care how you use your indicators, you use them the way you want.
Yeah.
All right, and then here's 70%. So what I look for is once we get a daily close below 30%
Yeah.
from these two peaks, my target is 50%. So now I will buy puts or I will short futures
Mhm.
until a daily close is above there.
Got you.
Once the daily closes above there, I no longer want to be in it because what I think is going to happen is probably consolidation and go higher. We can get into that. But ultimately, once we get a daily close below this 30% line in this fib from this peak to there, so instead of using a fib on price, I use a fib on volatility.
Got you. No, it's
Interesting.
It's exactly what you said there, and I love it in terms of like it doesn't matter how you use it; it's about how you use it. It's not
It's
about
how
how
I
others use it. It's not about what the general rules are, or whatever is promoted out there. It's more so about how do you use this to build your edge, build your confidence and your clarity.
Yeah. Two things I know when mean reversion happens.
Mhm.
I don't care if the primary trend is up. I no longer want to be long.
Yeah.
Okay. And now I can be short, but because I'm going against primary trend, here's where discretion comes in. I'm short small.
Mhm.
This is my target. Once it's 50%, I'm done.
Okay.
Now the next two levels are like, okay, now I'm gauging how weak we've turned, right?
Yeah.
You know, because ultimately what could happen is, as you get into nowadays, ultimately what happens is, let's just say the market were to keep moving lower. You know, we got those lines there, do this, right? Back at test the 50, and then all of a sudden this were to happen and the Bollinger Bands were to do this.
Okay. Yeah.
Okay. Now we're in range expansion lower. So
Yeah.
now I'm
Sure.
short only.
Got you. Love that. Yeah.
So again, I look at it from the most simplest way: two-way tape,
Mhm.
expansion.
Yep.
What direction am I in? Mean reversion. Doesn't matter what primary trend is. Adjust your position sizing. Look for a mean reversion move. Once that's hit, now you wait to see. So a lot of waiting in here.
Mhm.
That's the hardest thing. The hardest part is this right here,
Okay.
because I don't know if we're going to go into this scenario
Yeah.
or if we're going into this,
Definitely.
and that's where I get killed
Mhm.
historically and presently.
Let's take a break for a minute there, guys, because I want to tell you about the best CFD prop firm in the entire industry, Funded Next. Funded Next is a proud sponsor of Chart Fanatics, and they have been leading the CFD prop firm industry for many years, literally a top 3 prop firm. Now, why is that? Let me quickly just run through all the incredible things that they do. First off, they have challenges for every trader. Whatever you're looking for, they have. They have a 1-step challenge, they have 2-step challenges, and now
This ad is
industry-leading
long
instant
as
funding. You get them below? Now let's get back to the episode.
I can imagine though, because
for-
that is the unknown moment, right?
That is the unknown moment.
Because that's where you got clarity here. You have clarity here, or here if it's on the other side.
Yeah.
You have some clarity here, but that area there is when it's in between. Right?
Yeah.
And
It
makes
all starts from the daily. And I take stuff down. I'll use other things in short term to help me. Again, but that's not my primary strategy.
Mhm.
Everything's a daily for me.
Yeah.
Even as a short term trader, I started using this when I was scalping a ton. It was more about understanding what environment we in.
yeah.
That's all it came down to for me,
Mhm.
right? I mean, if I see we're taking on a prior day high and all of a sudden I'm lifting the offers in the S&P or I'm hitting the bids and I didn't know what the primary trend was or I didn't know what was happening with the Bollinger Bands, it's just I just caught myself always spinning down in that toilet bowl, right? In my own fast market, and I would just get chopped up or I'd be fading rallies, buying dips, and it just was over trading.
Yeah.
This helped me slow it down even for the short term.
I love it. And is there anything more to go over here, or should we go into the pros and cons?
This is it.
Yeah,
Yeah.
I love it. In terms of cons, just to always give the disclaimer, it's not saying it's bad. It's more so like hurdles or things to be aware of. But to be fair with this one, I do not see too many. I think just that area we just mentioned there might be the only thing that can stand out. Where should we start? Start with the pros.
Pros are I understand market environment. That's number one for me. I understand what type of tape it is.
Yeah.
Right. I mean, you can use moving averages, you can use all these different things, which I will use.
Yeah.
But ultimately, I understand those three things.
Yeah.
Mean reversion, consolidation, or are we trending?
Definitely.
And that to me is the most important thing.
Mhm. Definitely. Should we'll write the pros on this?
Yeah.
Here.
And so the other pros would be it keeps me out of bad trades. And I think that this is something that has helped me tremendously.
Yeah.
It keeps me out of over trading and it keeps me out of fading markets. It keeps me out of doing things that I would do on shorter term charts that would drive me to push the button.
Yeah.
So it allows me to be more thoughtful in my thinking.
Mm-hmm.
So that's a massive pro for me.
No, I definitely think so. I definitely think that's like the killer of most traders in their P&L. I would also say in terms of the benefit of swing trading being sort of more off the charts compared to being really, sort of stuck on them.
Yep.
Let's say swing trading here. My handwriting is terrible compared to yours.
Yeah, mine's not great either.
No,
Yours is pretty bad, I'll tell you.
I like the honesty. That's really. I think the only con, like I said, in terms of what stood out to me, I say con, but like something to be aware of was one, obviously there's patience to wait for certain signals, certain confirmations. That seems to be, so far of all of our episodes, the reoccurring theme is that there's a lot of patience, even when it's scalping or swing trading, which is phenomenal to see. And then the other one was literally just in between phases, making sure not to get chopped up in between.
And another con that I think, and it's really been an issue for me over the years, is like, more targets, right?
Okay.
It's hard to scale out of this type of strategy. I think that this is why, I'll look at what other people are doing and I'll look at, VWAPs, or I'll look at other things like that, and it'll help me understand like where I should be trimming positions and just gives me a little bit more context within the situation. I'll use order flow tools. Again, I am now, because I know the direction I want to be in, I can hyper focus on the shorter term stuff to help me become a better executor of this style.
Got you.
But that is definitely an issue that I think for a lot of newer traders, it's why I give it away for free. It's open source on Ninja. It's open source on TradingView, because it's not something that is going to give you like these proprietary targets. It's not something that's so crazy. It's just something that's really helped me slow things down, really be in the moment of what the market really is versus what at the moment I think the market may be.
Yeah.
And that's it. I mean, it's one of those things. I mean, I've leaned on this so much because you go back to like the cons, like the patience, but it's like, if I believe in it, I can't be patient because I do believe in it.
Yeah.
Because I've seen myself get chopped up in those conditions.
In terms of, you mentioned Beacon earlier. Is that something we need to be on here? Is that going to be there?
Yeah, Beacon's going to be on the chart, and all Beacon is an automatic fib that draws over the Bollinger Bands once the peaks are made.
Got you. Yeah.
So it's really that simple.
Got you. Cool. Well, let's
Interesting.
go
We'll say that interesting,
Let's take a
right?
break
I've never
for a
seen
minute, guys.
someone that
Can you
does
tell me about
that.
our incredible sponsor, making journaling and finding your edge and adapting your edge so easy. In collaboration with TradeZella and Chart
we
Fanatics
just skip this
specifically,
shit?
we are actually to make on your get back.
I've got 821, 34 moving averages here, and the only reason I put those, again, I want to understand trend. And, I've got some good friends in the space that use this. I've followed their work, and it's really helpful, again, to understand what the market's just doing in terms of overall trend, strength, and weakness. It never gets me in trades, but it does help me with exits. This is the biggest thing. The biggest con of this strategy is like, okay, where am I getting out of this? Like, am I just holding this forever? Like, okay, I'm long in like outer space, and where my stop's at too, right? That's the other thing, placing a stop. We didn't put that as a con, but for me, the stop is, it's not really a con because I'm gonna go over here exactly what it is, but the moving averages and other things on top of that are what help me with it.
Okay.
So let's look at a couple things. First, we talked about it, and it's a very similar picture that I drew, where it's like we were coming from a previous high. As we all know, the market's been trending down this year. This is the June contract for the E-mini S&P. Also at the bottom here, I have the RSI tool. I'll explain how that could potentially helps a little bit. Again, doesn't give me in trades, it's understanding environment. So if you look at this moment right here, and everybody, see how we were like in consolidation right in here?
Yeah.
Okay, and actually let's just draw something there just to make this super simple, right? This was basically consolidation, right?
Yeah.
We talked about this. Bollinger Bands coming in. Oh, we're going higher, and no, we're going lower. Oh, wait, we're going higher. No, wait, now we're going lower. And then we go lower. And what happens at this exact moment? Bollinger Bands expand. At this moment, I'm going, you cannot be long anymore. Short only. This was two-way tape, short only now. Now what happens is you get real extreme volatility like you're seeing right now, and the market just starts getting blasted lower. And so a couple things that will happen is, what I'll look at is, so for targets, again, it becomes difficult. This is where I lean on other people's work and stuff, because when we start to get here or even pull up weekly charts, I'll look at lows.
Mhm.
Anybody can find old weekly lows or highs to help with targets. That's a lot of times what I'll use.
Yeah.
But when you start getting really volatile like we saw this year, it's like they're just blowing through everything and it's hard to stay short.
How does this
which
guy
it
not
was for
know
me.
targets for his
But
own trades? Like, the fuck is that?
ultimately, let's talk about where I'm wrong in the situation. This high right here, okay, this high is key. Right here. I'm gonna move this. I'm gonna keep tightening it up. This high before these two highs right here.
Yeah.
So this market rallied and then we gapped lower. So now I look at it and go, first of all, you got this gap here, which would be concerning if you think we're going to go up and fill it. But this high becomes really pivotal to me because this high is where the tape just turned.
Yeah.
Now this high, if I'm in here now with the gap, I'll have to buy options because the stop, I want to be above the high. I don't want to get stopped out if it fills the gap. So it's kind of a unique spot. It's really hard to manage risk right here. Really hard. And so that's why I'll buy out of the money puts in that situation. Because for me at that moment, I can just pay for the put and basically put it in my back pocket and say, however much I'm willing to risk, I'm willing to risk.
Got you.
Next thing I'll do is I'll anchor a VWAP to that high. And I'll look at 1, 2, and 3 standard deviations lower. Because at least that will help me guide me from this VWAP as the market's starting to go lower.
Yeah.
Okay, can we stay below the VWAP? And I'll use 1, 2, and 3 standard deviations as exits.
And use that particular candle due to the fact that that's where the tape turned, as you said.
Correct.
Yeah.
I use the moment of the turn.
Mhm.
Right. And so, people, again, a VWAP is important as to where you anchor it. And I really learned this from Brian Shannon, and I talked with him over the years about this, and he's really the one who got me to start using this. And this was way later in my career. And it was really beneficial to me because I was like, man, I could just take it right from that moment.
Yeah.
Because what happened is I'm using cumulative, delta, I'm using other things, volume profile, and I was trying to find ways to lean on something and trying to stay directionally, and it's hard. But with this, I'm like, okay, if it can't close above the VWAP, which it never did, every day it would hit the VWAP, break, hit the VWAP, break, and I'm just using 1 and 2 and 3 standard deviations.
Yeah.
So in this situation in here, this is kind of where, I got roughed up on this day tremendously. Probably was one of my worst kind of few sessions in here was when the market started to come back up very quickly. This was the Trump 90-day pause.
Okay. Yeah.
Okay. I don't know really how anyone else could have, I don't know what to even say when you have a news headline that just moves the market up 10%. It's not the easiest.
Mhm.
I know a lot of people were looking for oversold. Ultimately, again, it gets really hard for me to manage risk. Even if I was trying to be long, I think I would have struggled in this situation. But I got tagged a little bit in this area and it was just difficult, right? Ultimately, now it got above here and I'm like, okay, when it started getting back below the VWAP on this particular day, I remember I bought some puts again, caught them a little bit, and then we closed back above the next day. And I'm just like, now this is what are we getting into? And you look at the Bollinger Bands. They were staying really wide.
Yeah.
And so it gets into a unique situation where we go, is it like a mean reversion or is it still heading lower? And this is actually a con again.
Getting a little suspicious, right?
You don't expect a 10% day, number one, and you don't.
If he has an understanding of what he just described, then that is a no trade. If he's because he literally just said at this point it's ambiguous what's likely to happen. Yeah, he's still taking the trade anyways. A little suspicious, right? This last 10 minutes, this guy kind of lost me.
Don't really know. Are we still trending lower, or is this thing going to snap back because of data
sounding
or
like
headlines?
a noob.
So it got tough. But ultimately, this area was a lot of doing nothing for me after that. You get tagged a couple times and you're like, all right, man, I tapped out. So what I'll do is at that moment, I'll take the VWAP and I'll delete it. And that's what I ended up doing. So I deleted it and I delete that box. And basically now I'm in wait and see mode.
Mhm.
And what started to happen over here, which was pretty interesting, was I started to get bearish again, just probably about 6-7 days ago. We couldn't hold the 8-day moving average. We had closes below it. The bottom Bollinger Band at this moment, see that Riz right there? It was still open. I thought we were going to go back down and test that low. I was shorting here. Okay. And I saw that we had a big rally into the end of the day. We got back up here and I ended up covering it. And lo and behold, look what happened the next day. Bollinger Bands came in and now we're in mean reversion.
Yeah. Yeah.
This guy,
And the mean reversion.
yo, I'm actually dead. This guy spent his whole first fucking 30 minutes talking about strategy, and then he just goes on a rant about how he didn't follow it at all. He didn't follow it at all. Oh my god, don't kill me, man.
This is where it draws it from the peak high of the Bollinger Band, 70%, 50%, 30%. And this is just 100%, right?
Yeah.
So now what's my target? was 55.23, roughly the old 90-day pause high.
At least
I
he's
talked
stuck with
about this,
that.
you know, on NinjaTrader Live and stuff like that, where I was like, look, I just think we're going back up, and probably in the perfect scenario to where we did have some news too, where we can grind up and come back up in here. Lo and behold, it was the 34-day moving average, which also helped me as a target, and now I'm planning.
That's great. And then that kind of works when you have these correlating factors as well, right?
Exactly.
Yeah.
And so in this instance, again, in here, it's like now we have a gap up. Here's the thing is where a lot of traders will talk about like what's risk reward in here. How do you do this? This is where the options market becomes better for me because very hard for me to buy futures here.
Yeah.
My stops are just way too wide. There's no way I'm buying futures on this day with 53.14 close and I see that I get a signal to be long with a 51.80 stop. I mean, it's just, I'm not doing that. I mean, you know, it's just like at that point, it's like my risk reward for my target of 55.23, I can't make money. What I got to do is I got to buy out of the money puts, and I got to say, once again, I'm going against primary trend, which is down. I'll be small and let the trade work. But once this 50% hits, I expect a lot of chop now. I expect, look at Bollinger Bands are coming in.
Yeah.
We went from expansion, consolidation, to mean reversion, and now we don't know.
Yeah.
Now, hands in the pocket, we got to wait.
That's it.
That's the strategy.
Love it. Thank you for breaking that down for us. And I think there's so much to take away. And I think there's really key lessons, especially the foundation where we started, is like identifying direction, identifying the conditions that we're in. Because once you have that as your foundation, the decisions after that become pretty straightforward. And I know we talked about discretion and sort of, you know, having a really clear process that you could even program. But this is almost like you said, the discretion comes in towards more the end. The start and the foundation of getting that direction is clear. That's clear cut. You know, what condition are we in? What is happening? Are we mean reverting? Are we consolidating? Or are we, you know, expanding? That's clear. Then after that, you then have obviously your execution side, and then the discretion comes in with the management, really, targets wise. And that's kind of, I would say, pretty standard because it's quite rare to see your traders who are sticking to say they have just a select risk to reward as their targets and their trades, right? And then again, as to your point earlier, if you're doing that, program it, make it easy for you to stop doing the stress. You know?
Yeah, like if I had my mine program, the reason why I don't have mine programs, this would trigger a buy right here with a stop below this recent swing low.
Yeah.
Well, that risk reward is crap. I can't trade that way. I wouldn't trade it that way. I would wait intraday to look for some areas to buy, or I buy options. The only way to do it.
Yeah.
You know, so that's why I can't do it. For me, the biggest discretion is position sizing. I don't trade every position the same exact size. It's always about the distance of risk. So if my distance of risk one day is 20 points and the next day it's 200, I can't have, you know, 10 minis on for a 200-point risk versus where I should have 50 on for a 2-point risk. You know what I mean? It's just, it doesn't make sense.
Yeah.
So my amount that I'm willing to risk, my risk capital, is always going to be a dollar amount, and then my position size is going to be adjusted towards that. And that's why buying options is the best way. Last thing, the only thing the RSI does in this situation is, were we dramatically oversold on that low? Do I identify this as a good low? And the reality is yes. All I look for in this situation is, did we get oversold? Did we get overbought? If we did, and we're in a mean reversion potential move, which we were here, I say to myself, okay, that actually makes sense. It gives me some confidence that we're going to go up and hit that 50% line.
Got you. Anthony, I really appreciate you breaking this down for us today. Drop a comment with your biggest takeaway from this
And
episode.
the
Any
overall
questions?
strategy was interesting. The execution bit was a little sus. Say that. Also, in terms of like this whole like I mean, I don't know. I have to look at the data, right? Look at this guy's data. Because I could see a world where this is like a hyper aggressive TP, especially if it's like a full close on this 50% retrace. I don't know. I have to see this guy's data to like verify that. I was sneaking suspicion, but can't say definitively. Anyways, enough of this. Enough of that. Close that. But we didn't tap this low yet on like perps, and it doesn't even exist on CME. So kind of curious to see what happens there. Do we do a juice box? Do we do a juice box? Thing is, nothing's really changed, right? In terms of like the Discord updates, kind of just going along with the plan still. I mean, maybe you can look to get on the short if we get a retrace here before breaking a lower. Or we got the Valeria low. have a VWAP. Probably really the only thing worth mentioning, to be honest. And actually, just kind of look at this real quick. So we'll save that. Save that. $7,000 or 70,000. I'm just thinking if you'd entertain like the poor highs up here. Probably not, right? Probably not. Whatever. We already talked about like the long down here like on Discord, so nothing's really changed. Although I'd be a little cautious, right? Kind of just 6-4. Like if we start to spend a lot of time below this zone, I start to get pretty suspicious. That's like where most of like the liquidity ends down here. So we start to like hang out here. And this is like obviously in the scope, right? Keeping the low. Getting like the 57 cluster. So yeah, just keep that in mind. But we've already kind of talked about that, so no need to kind of be a dead horse there. Downside levels have already been discussed. Nothing new there. To the upside, it'd be something we're talking about earlier today. Out of curiosity, though, let's just draw some VWAPers. Yeah, like reclaiming like this kind of zone, right? Like reclaiming the VWAP, reclaiming the Valeria low, reclaiming the TPO level. Could also wait for like a retest of some of this stuff before taking it. Or any kind of like typical reversal structure that we look for here. How's your order book looking? A little sketchy though, a little sketchy. Because at the end of the day, we have not finished clearing this stuff, right? And there's still more like more of like the high leverage liquidations are still down here too. So like, are we really gonna retrace like 95% of that move and kind of like reverse? Unlikely, possible, but there's a massive buy wall here right now. But Could be a spoop, I don't know. 1,600 Bitcoin sitting in that bitch. Yeah, maybe wait for something a little bit more safe on the higher time frame. Ideally, we tap this and then do like the reversal reclaim, right? Reversal and reclaim after tapping the low. If not, I'd be flipping these like this poor high kind of region, right? Like all the VWAPs that were coming there that we just had, like the orange ones, like this kind of thing. At that point, safer, but still like not the greatest of long setups, we'll say that. At this point, you're a little late, right? Like this is quite the juicy long opportunity, and there are so many times to get in on this thing on the way up. Just now you're kind of trying to weasel in before the next move. But yeah, it's probably gonna be your best bets, right? Reclaiming this region, getting in, or getting in on the retest, or waiting for like the retest up this zone, like this kind of golden pocket flip. Well, it's like this kind of thing, or flipping this, or flipping up here. Probably gonna be your 3 best bets for attacking this higher level. Yeah. And I'll leave that like that. Or the other 2 plans we just discussed. And for the shorts, hard to say. Again, a little late, right? What you could have gotten on like this SFP, or you could have even had like orders up here, right? If you really wanted to. Hard to say. It's probably gonna be like retesting this kind of region. Like ding ding. The bearish retest of that zone. A little risky, but where's the 382? Yeah. Kind of like bearish retest in here, right? Or like straight up off the VWAP at this level. But at this point, I don't know if I'd be entertaining it, right? You're like right in the middle of the cluster. It can easily get flipped as you start to like squeeze out these highs. Bearish retest of PD value low / the daily VWAP. Whoops. At 382. Probably something like that. Yeah, risky. Because if we start to reclaim this up and start going higher, then like you're both potentially getting run over here. I've been looking at the open interest lately, so I don't know if people got trapped down here. But if there is more potential confluence to continue squeezing, right? Yeah. I just keep those things in mind. I'm out here. I'm tired. I'm tired. I'm like half asleep. I'm like dozing off here. Trying to get rid of this stuff. In terms of the rest of the week, what's going on? And it was CPI on Friday, and I'm supposed to. They're gonna be releasing all the what's it called? Like all the revisions, right? For all the data last year, all the revisions are getting released. We're pretty interesting to see how those turn out. Yeah, but tomorrow as well, like the non-farm employment change, unemployment rate. Also like the 10-year bond auction. And unemployment claims on Thursday. From real estate market data, 30-year bond auction. Buffalo OMC members are yapping, and then we have CPI on Friday. In terms of the earnings, what's going on this week? I think we got past most of the big ones, right? There's gonna be too much going on. Nothing too crazy. So I'm out here. I'm tired. We'll be back at it again tomorrow. Thursday. I'm out on Thursday in the evening at 7 or 7:30. So if we do stream Thursday, it'll be either a daytime stream or B like a lot later, like 9 or something whenever I get home. Whatever, we'll kind of sync back up tomorrow. I'm tired. I can't be bothered to speak right now. My throat's killing me. We're gonna call things here. I'm out. Oh yeah, chat shout out. Do a quick chat shout out. That was a NASCAR all out. I think that was it, right? More or less. But Harris, shout out to Harris Kamal. Some familiar faces back at it again. Yeah, that was it. Okay, cool. Be back at it again tomorrow. But for now, we're out of here. Later. Later.